Okay. All right. Welcome to McBoss Capital channel. Happy New Year to everyone. This is our first video of this year. We have started with a remarkable year so far, and it's quite amazing what has happened compared to 2022. I have Sunil here. Sunil, can you hear me? Just want to make sure you can hear me. What I'd like to do. Earlier, Sunil asked me just kind of roughly what's been happening in the market. We'll go to touch on that pretty quick here. Just want to talk about my daily routine just because I feel, at least for now, I feel like this is the pattern. So I believe we have most likely started a bull market since October, and it's more evident each day as the day progress. Um, we'll talk a little bit about the macro in a second, um, but what happens in the bull market is that market will usually open weak but close really strong. And so if you follow that pattern in the bull market, generally what you want to do is like for me, I would my daily routine is like I usually wake up by 7 and go on the computer, and I would start following the pre-market, kind of earnings news or whatever news, and I watch the pre-market trade on stocks that I own and see how they're behaving. So, for example, like Friday, we have huge drop on the mega caps, right? Apple, Amazon, Google in the morning, and I noticed most of my stocks were acting okay, like they weren't dropping much, even though Nasdaq future dropped, quite significantly. So that's important to pay attention to because usually that's how I kind of look at the day and say, hey, if my stocks are behaving really bad as well, I would kind of like be less aggressive that day, in buying at least. And then I might be even, you know, um, try to sell some too, right? So usually what I would do is in the morning, whether it's an up or down day, in the morning I would usually take some gains, and some stocks will shoot out the gate, um, and just because some maybe there's buyers coming into some stocks, and they will jump, and then within half an hour they usually drop, or the first hour. So I usually sell quite early in the morning, and then just let it settle. Right after that, I give it a half an hour to 1 hour settle. If things are rebounding, then I would start to, usually I would have my watch list ready. So the previous night I would be studying which stocks I want to get into, and and so then I would execute buying those stocks like I said, half an hour to 1 hour later after the market open. And so that's kind of like the pattern. And I rotate a lot. I'm pretty diversified. I do a lot of trades. Um, so that's my usual trading pattern. Um, but in a bull market, if you're pretty sure the bull market has started and it's really obvious, then doing a more medium to long term approach may be also a better trading. Then you don't have to do as much trades. So that's something that I plan on doing very soon. So starting to put some into more longer, medium to longer term trading if I believe this bull market will continue. So just want to quickly touch on three very important uh, co concepts here, uh, in terms of making mistakes that most people do. And I just want to review that because we all do it. So we just have to kind of remind ourselves that no matter how strong the bull market is, or that you think is a bull, whether you think it's a bear market rally, that's not really the important question. The question you want to ask yourself is how do you trade? And the three top mistakes that most top traders will identify is number one, averaging down. If you bought a stock and it's not moving up, especially in this rally right now, don't average down. It usually means that stock is going to be a laggard, especially in this kind of environment. Second thing is, obviously cut your loss if something doesn't go the right way you plan. So if you should have a loss criteria. Um, and the third thing that that's probably happening right now is there's what we call FOMO, right? Fear of missing out. And so what happens is people want to buy into a really strong stock and they will buy extended. So those three mistakes happen, whether it's in the bear market or bull market. We just have to be, conscious of those three things because that's where, and I kind of prioritize this based on most likely where you will, like this is where you lose the most money if you start to average down. For example, at the beginning of the year, I was pretty bearish and I was shorting. And, as the market start to move up by the end of first week, second week, I start to lose money. So, and don't average down because I did add to it, and guess what? I was wrong. So, so that's how you can lose big money. Imagine, I cut my losses. That's like right away. Like I cut my losses. You have to do that, right? So, so those are the top two mistakes you can make, whether you buy the index ETF or you are buying a stock, right? If it doesn't work out, you need to know how to not do this. You need to, not average down, and you need to cut your loss, right? So, um, so those are very important thing to do. And then right now, I think probably very hard for most people is the fear of missing out, right? Buying extended. There's just so many stocks running wild right now, and it's easy to get trapped and feel like, hey, I'm missing out. This might go up another 30, 20, 50% in the next few weeks, right? And so you like, and you want to buy, right? And it's okay if you want to buy. Just make sure you know how to cut your loss, right? Because again, you can't bet on one direction and not cut your loss, right? If you're thinking that they might go up, another 20, 30, or 50% in the next month or two, just be ready to cut your loss if you're wrong, right? So that's very important, those three things. Yeah. Any questions so far, Sunil? I know you're listening. Just want to make sure.
Yeah, no, sounds good.
Yeah. So we're gonna jump into Mark Minervini book for a second. Um, I read the last two chapters in the book, which is about risk management. But one quote that he gave out recently, and I'm sure he gave this quote out quite a bit on his Twitter, it really caught my attention. I don't remember which day he put this. It was quite early in the year. And this it is more important to make money than it is to be right. And then I add on part of that, is follow the trend. And this is so important because this is what's happening so far this year, is that we have so many bears out there. And there's analysts that are bears and they're continuing to believe that the economy won't do well with this high inflation and interest rate environment. And but the market, and again, the reason behind the macro is because the 10-year yield, bond yield has dropped to like very stable at 3.5 roughly. I think maybe on Friday it did rise a little bit more. I can't remember, but the thing is, it has been stable, and so market is saying that the Fed, and I'm sure most people already heard this, saying that the Fed can go too far in terms of hiking rates, and because of the bond yield, the 10-year bond yield, and it may be true. Maybe there's one or two more rate hikes, right? No one really knows. I think the blur picture is now in the second half of the year rather than in the first half, and no one really know what's going to happen. Whether economy will just suddenly drop and tank like crazy, or whether the Fed's going to go do something crazy like keep raising for the rest of the year. Like, who knows, right? So those are things that are known right now. And and then with Friday's job report, it didn't help with Fed's case, scenario, which is, they really want to slow down wage inflation. And with this number of jobs, 500,000 jobs created on Friday, it was, one of the strongest job report in the last year for sure. And it really scared a lot of investors. So, no doubt market tried to rally, but then it fizzled, right? By the end of the day. And so I'm not sure if this is something, again, market gonna take this as really bad, going forward, because the Fed is just gonna keep raising rates. And part of this bounce for sure, like most people said, is positioning, right? Because so many bears uh, got out of the market, and because of tax year sell, what do you call it, tax loss selling at the end of the year last year, most people are out of the market. So all of a sudden, the people who want to sell has already sold, and now it's just people buying, right? Like the people who want to get back into the market. So that's why we see this big bounce, and and um and it really create lots of FOMO right now, even among top analysts. And I was listening to one of the analysts. I think it's I don't want to say names, but she was like really scared about that. She's wrong about the economy, and there's so many bear analysts right now and saying that the market can't go too high, right? They can bounce, but they can't go too high. And obviously, um, we'll look at chart in a second, but S&P has you know gone above the downward trend line for last year. So that was a big sign that something has changed, right? So anyhow, I'm going to jump to the book. There's a couple of things. I'm starting from the beginning of the book again, and it's kind of related to what I want to talk about next. Is David Ryan. He mentioned in the foreword on right at the beginning of the book, and he talked about um, yeah, he talked about how Mark's book, trade like a stock market visit, that it's one of the best book he ever read, and that he would never imagine someone could write that good of a book. And I just want to highlight some of the keywords in his forward, and I feel like it's very important to understand. Like basically, his book is about investing in growth stocks, and it covers the not only the fundamental aspects of investing, but obviously the technical aspects, right? And your goal is to find uh, super performance stocks, right? So like stocks like Apple, Costco, and Home Depot, those are super performance stocks. And he also talked about so again, this is David Ryan's forward about his reading his book, and he also talked about how Mark identify the different phases of stock cycle. So usually they will start from phase one. Usually that's like some base that's building, and it will accelerate earnings and price performance, and it will go in phase two. That's where the most of the big run is, right? So there should be acceleration of earnings, and also the price should move as well, right? And then finally it will top in phase three. So that's usually when it will top and it will start to come down. And that's phase four. And usually during phase four is when a lot of negative news, like like earnings are slowing, right? Stuff like that. So you want to learn about using price charts and look at fundamentals like earnings and sales. And then David talks about how he use discuss risk management, and how it is so important to learn how to take profit and when to sell as a position goes against them. So basically, cutting the loss, right? He also talked about how uh, Mark's way of thinking, and I really want to highlight this because as I was reading the last two chapters, or especially the last chapter of the book, he talks about this significantly. Is that he's only right, and so they were saying this, is he's only right only 50% of the time, and has still made a fortune, right? So, and this is because of risk management. So I don't have the digital page on this book, but But if you go to page, I think it's in last chapter, and it was on about it has a table, figure 13.1, and this table, it shows basically average percent gain and average percent loss on your trades. And so let me just jump to my spreadsheet here because I want to show this because I did this. So I started doing this. Okay, I never used to do this, but I really believe in what Mark is teaching, that you need to pay attention to this if you want to be really successful trader. So I have my spreadsheet here on not this week, but the week before, all my trades, and I trade quite a bit. So um, so here's all my trades. I have 48 gains and 23 losses. So these are all the ones that has closed, right? Obviously the
Are
ones that
you
have.
sharing that on the
Oh,
screen or
sorry.
okay?
Oh, sorry. Let me share my screen. I'm so sorry. Yeah, let me point that out. Just give me 1 second. I forgot I wasn't sharing.
Yeah, I
Yeah.
can see the figure 13.1. Yeah.
Yeah, figure 13. I'm going to talk about that in a second, but I want to use my spreadsheet to show this example. So here's all my trades here in the last week. Most of them, like I'm taking very small gains, but here's what he wants you to understand. You need to measure your average gains and losses, right? And how many gains and losses you have. So this is like 48. So this is the week of, not this week, but the week before, ending the 27th, so January 27th, right? So I had done many trades, and these are the ones that close, right? Like meaning the whole position is out, because I can't measure it when it's only half position out or something like that. It's just
Mhm.
harder. And also, this doesn't take account into the position sizing. So like some trades might be bigger in size, some might be small in size. So I just want to let you know like how I'm. But for me, I just want to follow what Mark is teaching, and just measure your average gain and loss, okay, on each trade. And so, and how many gains and losses you have. So let's say in this case, I did about 70 trades, right? And 48 of them are winning and 23 of them are losing. And so, and then you take the average of those gains and take the average of those losses, right? And in that table in figure 13.1, he talks about how he showed like, you should always aim for 2-to-1 ratio. So like if your losses were 2%, you should aim for 4%, right? Kind of you
Mhm.
try to do that, and when you do that, and he's using that table as example, right? Imagine
Mhm.
your risk ratio is like 2-to-1, like reward risk ratio, and so that, like for me, like I said, these are very short term trades. But if you can do longer term trades, and therefore you can go for bigger gains, right? But using the 2-to-1 reward risk ratio, and he put together that table basically at 30% batting average. And you can see here right now I'm at 68%, right, that week. So meaning like I win way more than I lose. But at 30%, you pretty much at a 2-to-1 risk ratio, you pretty much wouldn't make money. Okay, that's
Mhm.
what that table shows. You can see all the at all the different gain risk ratio at 2-to-1, like whether it's 4% versus 2%, or 10% versus 5%, or 20% versus 10%. Those are all 2-to-1 ratio. But at 30% balance average, you will lose money. And so in that chapter, or in that section, he talked about how when you have low balance average, most people, what happens? What does that mean? It means that you're starting to lose on more trades. But what people will usually do is they extend the risk, because they're saying, hey, I keep shaking out, or I keep losing money. Maybe I give it a little bit more room. Maybe like instead of giving 3% risk, I give it 5% risk, or like they keep moving the stop loss down. And if you look at that table, what the table shows you is that it actually does the opposite. You will lose even more money because your batting average are so weak, right? So that's something to pay attention to. But what I want to talk more about is let's assume your batting average is pretty good. Let's say it's like I said, 40 or 50%. And that's what he's aiming for, is 40 to 50%. And so at a 2-to-1 minimum risk ratio, reward risk ratio, um, there's different optimal point, and the optimal point, he doesn't show like what happens if you have 60% batting average or 70% batting average. But as this table shows, the higher your batting average is, obviously the more you will make, right? It just makes sense because you're winning on most of your trades, and also your
Mhm.
reward risk ratio it was 2 to 1. Like mine, you can see it's not 2 to 1. So I need to improve that. Mine is more like 1.5 to 1, right? So I need to improve this significantly. And but that's how you learn about your own trades, you know. Um, and so that's I just want to point this out because I feel like um, this is what he teaches in terms of managing risk, and so and also it gives you feedback, right? When you measure this, it gives you feedback. Like I'm doing this weekly now. At least I try to because it's a lot of work to track this because I do so many
Mhm.
trades. But I want to do it because I want to know like he talk about this a lot in his book, right? Is that when you measure this and you start seeing this, and he does it monthly because he doesn't do as many trades as I do. He probably make like 15, 20 trades a month. I don't know. I don't know how. Maybe more. I don't know. But um, but I'm doing a lot of trades, so it's hard to measure, but it takes time to measure this. But I really want to see how I trade, right? Based on what Mark is talking about. So that's why I'm doing this. I want to, learn from myself what's happening about my own trades. So now, like I said, I already very clearly, even though my balance average is so high, but my gains are really small, right? Um, and you can't just take 1 week as your oh, I need to you know let the gain go higher. Maybe this week you have to ask what happened this week too, right? Like in the market, did the market kind of just really slow moving? Is it moving really fast? You have to kind of measure that against the market too. You can't just say, oh, but it's good to know, right? Because then you can ask yourself, um, how can I improve this, right? And especially if you're not doing well, let's say next week my batting average go down to 30 or 40%. Well, why is that happening, right? Is it the market not doing well? Is it your stock picking skill not doing well? What is it, right? Stuff like that. So it's important to identify what's going wrong, and maybe you should scale back, right? And that's one thing he talked about. If your batting average start to go down a lot, and you're all of a sudden your average loss is way higher than your average gains, you are losing money big time. And so you should scale down. You don't want to trade as much anymore, you know, and let the market tell you when. So right now is good time. So, of course, most of the trades you do will most likely make money. It's pretty hard to lose money in this environment right now. But, you know, not all good things last, right? So you have to be cautious as well. So any questions about this topic here?
No, sounds good. But aren't you already at 2 to 1? Because isn't 66.66% like it's two-third?
Sorry, the two
Right.
to one ratio is for the gains versus loss.
Okay.
So if I were to take 2.75 divide by this, oops, yeah, it's actually uh, not even 1.5. It's slightly less than that. It's I have to divide by 100.
So 1.44.
Yeah, 144%, right? So
Mm-hmm.
so it's it's not really that high, right? But I have a high batting average. So again, he never showed the chart right after 50%. So I assume you will gain a lot if you can reach 2 to 1 ratio, right? But he didn't show that. But obviously, it makes sense, right? So, why is this not happening? And yeah, so no, it's good to measure this stuff. I think, just because yeah, like I think it's very important. Like I said, I never used to do this. I didn't. So he talks about this in his book. He said most people know about this, but they don't want to measure it because they're afraid. Um, to see their own results, right? And
Mhm.
I
Yeah.
do, and I feel it myself when I was reading the book. I was like, really, you have to do this measurement and all that. What if I don't do well? What if it looks so ugly? Like I said, who knows, right? Like 1 week I could be like completely opposite. I could be like, you know, only right, 30% of the time, and maybe my gains are much lower than the losses, my average gains, right? And, but that's how you know something is wrong, you know. And so he talks about this. He really believe in measuring this and doing this every like for him he does it every month because he doesn't do that many trades. But for me, I should do it every week. So anyhow, just want to bring this up, and it's very important. And I'll be watching myself this year. Like I say, I really want to become a better trader, and so this is one way that he teaches that that could measure very very importantly. And like I said earlier, I plan to start probably a little bit longer term trade type of portfolio, and I will be doing this kind of measurement too. Right? Okay, so that's that. So that for a longer term, obviously you can go for like you know bigger gains and 5 to 10% or even more, right? 20%. Uh, anyhow, um, so the next thing I want to talk about is David Ryan. Okay, um, it's kind of it's kind of tied to this because he's the one who wrote the foreword for that book. But let me see if I can find my find the Twitter. Let me jump to Twitter for a second because I didn't bookmark it. So, but I feel like it's important to mention this because he's been incredibly right so far. Like incredibly right. Like I just don't even know how he does it, but he's so good at the turning points. It's not even funny. And he's not even a Wall Street analyst. Like it's just incredible. So
Hmm.
I want to point this out. That's why like I think this is it's important to have to follow someone who's that right, you know. And so his tweet, January 6th, tradable rally underway with rates and dollar dropping. This is not a new bull market, but another rally that could take the SPY back to 410. Industrials resource names should lead. Now, that is a question mark there. Okay, we'll talk about that later. But interest rates, dollar has been dropping, and hence um, there is a market rally. So if we jump back to the chart for a second on Market Smith, and we're just going to show the S&P 500. I'm going to take away the markup just to make it nicer for now. And if I use my tracing here, January 6th is near the bottom, I believe. Yeah, right here. So this day, it was a Friday. I remember clearly. I was on IBD live listening to the traders on IBD, and he jumped on the call like around
Hmm.
8:15 in the morning, and he saw something unusual that day, which was stocks were breaking out. And at that time, it was weird because a lot of industrials were breaking out, but eventually a lot of them fizzled. Okay, I just want to let you know that. But the market continued to rally. Um, and then we all know what happened. Nasdaq took the lead. So at this point right here, and this day, I think Nasdaq was much weaker. But S&P was much stronger. But Nasdaq took over the lead, and same thing with Dow, I think. So that was the this is the day that it started to, and it wasn't even above 50-day yet, right? You can see S&P, but if you go look at Dow, right? See, it was much higher here. You see, it's already above 50-day, and also yeah, like he was saying, lots of industrial stocks were. What else did he say? Industrial and resource names, yeah. So,
Hmm.
but like I said, they both did fizzle out eventually, which is kind of weird. And so then if you go to Nasdaq, like Nasdaq was the weakest. January 6th, yeah, see, it's right here, right at the bottom of this chart, and it's nowhere near the 50-day. And if we go to
Hmm.
Russell, same thing. Nasdaq and Russell, same thing. Okay, uh, January 6th, right here. Okay, now that day, same thing, below 50-day. Now that day, what happened is by the end of the day, there was so much volume. I don't even know where the volume came in. If we look down here, right here, see, there was lots of volume that day. It's like way above average. And um, yeah, just right here. And so one thing during the break, I don't know if it's during the break or after this week. Maybe this weekend, that weekend or right after. I want to study how do you know if a bull market has started, right? And I feel like I need to study that. And I hear lots of opinions about um, how people figure out where the bull market has started. But
Hmm.
okay, before I jump to that, I don't want to forget about this. I want to finish David Ryan. So what happened since then? On February 2nd, which is on Thursday, he came out and say, "Hey, SPY has gone above 410, which is like 4100, right?" So we go back to S&P on Thursday. This is the day it went from, yeah, like even Wednesday it already surpassed 4100. So Thursday morning he tweeted, and that day it jumped even more on Thursday, right? So it came close to 4200, like 4195 was the high. So, and it says here what now is running into overhead supply from last year. With lots of momentum and liquidity, SPY should have a new trading range between 390 and 431. So now he thinks he might go to 4300, as high as 4300, right? Like this is the new trading range. Okay. So it could drop back down to below 4,000, like he said here, to 3,900. Stay flexible, moving money from extended stocks to names just breaking out. This is a very important point. So basically, what this is saying is don't chase those extended stocks. If you have gains, take it, move to stocks that are breaking up. And that's exactly what I'm doing right now, right? Take gains from your extended stocks and move to stocks that are breaking up. Very important point there. So I just want to quickly point this out. Any question about that?
No, sounds good. Yeah.
Um, so I did a stuff. I wanted to research, right? How do you know if, like what happens at bull market start, like for example, '09 and '03, right? And even uh, the COVID bear market, right? Like even though that one's a really short one. And I did, and I look back and I want to show you because I feel like this is so important. Because I was, at that moment, as the market started to rebound, how do I know this is going to become a bull market? Like even now, how do you, like it's already run up so much, how do you know, right? And one thing I found, and it's quite interesting to me anyway, is if I go to look at, let me start, like, okay, let me uh, add a list here. I just want to add all the index. I want to show you this, add, and I'm going to change this. Let's start from COVID low, right? Because that's the most recent one. So let's say we start
Mhm.
at April 1st, 2020 to now, right? Um, like we don't even have to go that far. Let's say to um, December that year. Like, it doesn't have to go that far. I just want to prove one point. Okay, it's kind of hard to see. I'm gonna bring it smaller. Let's go to June. June 30th. So what happens in the first few months? So here you go. We have Nasdaq 36%. Of course, this is like, okay. Let me make it even shorter. It's just too hard to see right now. Okay, there you go. Okay, so look, Dow S&P is at the bottom, right? But what's more important, I want to show is this. So as this market is bottoming, what happens, right? So here's the blue line IWM, and if you follow it,
Mhm.
unfortunately, there's two blue lines, I think. Okay, so the darker one is Dow Jones, the lighter one is IWM. This is sorry, so hard to tell the color. Yeah, so this is the lighter color. So you see, IWM is at the bottom when
Mhm.
it's the bottoming process, and but it overtook right here, right here. I don't know if you can see my cursor right here,
Yeah. Yeah.
right?
Mhm.
So as it bounced, basically what I'm trying to say is, as it bounced, right, from a bear market, it should become the strongest IWM. And
Mhm.
Nasdaq, look at the Nasdaq is the kind of light brown color. So if we
Mhm.
look at this. This one took a little bit longer. Look, Nasdaq right here, and look, it overtake here, right here at this
Mhm.
level, become the top, and then it become the leader, right? And because why is this important? Because you don't know if it's a bull market, and I'm going back to study this, right? And you don't know a bull market until Nasdaq and Russell 2000 lead.
Mhm.
Okay, so let me go back one more. Let's try it. Like this is so fascinating to me. And remember, I was studying this before the market really rise a lot, and what I was, one of the things like I say, I was very bearish at the beginning of the year, and part of the reason was because Nasdaq was a laggard, and it was way down here, right, at this level, right, whereas S&P and Dow were already above their 50-day, right, and but
Mhm.
but eventually it caught up, right, eventually, and that's what we saw. And if we go look at Russell, same thing. It was way below the 50-day line, and then eventually it just went like a short angle, right? Now let's come back to that chart because, like I said, let's go back to '09, right? So that would be like roughly around March bottom. So we can put March '09, and we can do like same thing. Let's do a few months here just to prove the point. Okay, so again, unfortunately the color is very similar. So here's IWM at the bottom. Nasdaq is the light brown. It's right there. Not that much difference, but it's still at the bottom. And then you can see Nasdaq actually took a while, took a lot longer in '09 bottom. It took until May, like somewhere like right here is the where it crosses the top. Oh, actually right here. Sorry, no, sorry, I'm wrong. I'm looking at the wrong one here. Right here. So right here, yeah. So here, see Nasdaq took over.
Mhm.
IWM is still at the bottom. Look, it took a while. Look at this.
Mhm.
But right here is where IWM took over. So Nasdaq took over here, but Russell took a lot longer this time right here. But what my point is, Nasdaq and Russell in the bull market should always lead, and
Mhm.
S&P and Dow will always be second to them. Let's go back to 2003. That's when the market bottomed as well. So let's go to 2003.
Mhm.
Okay, this one is much tighter. Let me see, did I do this right? Okay, right here. Okay, let me go to March, just because it's harder to read. Go to March 15. There you go. Okay, go back. Let's try it first. Okay, so it bottom here. Okay, and look at this. Nasdaq right here. Okay, so you can see there's another dip here. Dip, I mean, sorry. And so Nasdaq took over here, but then it fell back. Okay,
Mhm.
now this one, you see Nasdaq is still low here, low here. It's left. So here is IWM. You see it clearly taking over. IWM right here. So right here, IWM, Nasdaq took over. It took a little bit longer, May. Um, but we clearly after May, you can see it clearly outperformed. So this one took a little bit longer. But my point is, this is the beginning of the bull market, and that's
Mhm.
what you want to see. You want to see Nasdaq and Russell really strong, and that's what we're seeing in both cases right now. They're leading, okay, and so that's why I don't want to like I don't want to predict the future really, and no one should. Again, it doesn't matter if the bull or bear market right now. Like honestly, just you just have to follow the trend. Again, come back to the quote, right? Um, it doesn't matter if you're right or wrong. It's more important to make money. Like this is so important, right? And this is an environment that you can make money. Okay. So the other thing I want to point out. Any questions about that? I feel like that was
Mhm.
really important to identify because
Yeah. Yeah.
again, I don't know. Like I don't know. Maybe the whole market is wrong. Like so at Yardeni, yeah, at Yardeni, were it was a really cool segment on CNBC. I think it was I don't remember. It was Thursday or Wednesday. And Ed Yardeni versus um what's his name? Eric Johnston. It was really cool. Like like these are two guys that I admire a lot. And so Eric Johnston was a bear and Ed Yardeni was a bull. Okay. And so the conversation was basically come down to at Yardeni thinking like he's been a bull since like October. Well, let's put it maybe late November, but he's saying October low is the low, and um, and Eric Johnston has been a bear since I believe, yeah, I believe December. So anyhow, he was right for most of December, but then January he's still a bear. And what Ed Yardeni has been saying all along, okay, for the last many months, is that the economy is in a rolling recession. So meaning the recession wasn't like all at once, right? It was all like in different areas, and now we see that in tech sector, right?
Mhm, mhm.
And what happened? Despite Microsoft missing, despite Apple missing like crazy yesterday, like they still came back to green. It's unbelievable. So, that's the power of a bull. It's because analysts are saying, hey, like I'm talking about the bull analysts are saying, hey, the worst is over. Like even if it's not over, they believe the company is about to turn around, right? I don't know if it's true. No one knows if it's true, but that's what some of the bulls are saying, right? Um, and same thing, they talk about the yield. That's where most of the bulls are relying on is the yields. The yields are telling the market that hey, the Fed is wrong. Um, that you don't need more interest rate hikes, stuff like that. That inflation will come down and stuff like that. He also say that, which is really interesting. He also say that maybe this is the new environment. Maybe the economy can survive at high interest rate and we're gonna live with high interest rate maybe for a while. You know, when you say high interest rate, you mean like 3.5%. Like that's where the yield is pointing right now, 10-year yield. So eventually, the Fed has to come down to at least 3.5. So that is he's saying that is the normal environment going forward, and maybe that's the case. I don't know, right? But that's what he's saying. Whereas Eric Johnston, he's still very stuck, and I was stuck with his mindset too. And that's where a lot of bears are. That the PE ratio is too high right now. I think it's like over 18 now, 18.5 or something. And earnings are still going down, and that's it's true. The earnings are really bad this quarter so far. Like I think it was like at least below zero, so meaning no growth. For the whole S&P 500, but only like I don't know, maybe 50% have reported. I can't remember. I don't really know the number, but it's bad. It's not good. And he's saying that earnings is going to continue to go down even next quarter. And that's true. It's forecast to go down even more. So how can the market rally when earnings are going down? So that's where he's stuck at. And he's stuck at with
Mhm.
the evaluation of the PE and stuff, right? So I don't know. Again, I think it all comes down to like, um, how fast can those companies turn around? Like especially like I'm using the mega caps as a good example because they're the obvious ones. How fast can they turn this around? They're laying off people. They're going to try to be more profitable by doing that and stuff, and they're going to be more efficient. All these things that they will say they're going to do, right? How fast can they do that? Because that will affect their bottom line. So even though second quarter, we've not even done first quarter. They're already talking about second quarter. Even though second quarter is forecast to be really even worse than this quarter, but maybe they're going to turn it around to improve their profitability so that the earnings won't be as bad. So meaning second quarter, most companies might beat because of that. So I don't know. I'm just saying maybe that's what the market is trying to say, right? Anyhow, does that make any sense? So
No, definitely. Yeah.
yeah. So again, I'm not saying the market's gonna run up wow, but I'm saying it has already. So just to be fair,
Right.
but at some point it's gonna pull back. You just don't want to get caught in those pullback, and it's normal to pull back. Um, at least to the 10-day moving average. That usually happens. You know, you see 10-day, 10-day, 10-day. They never like same thing with stocks, right? They never just go up without pulling back to the 10-day. So at some point it's gonna pull back to the 10-day, and you don't want to get caught in that because even though this is the index, it could be painful if it's a stock because usually they drop even more. So here's the 10-day line, right? So you want to be cautious of FOMO, right? Um, don't buy extended. Right now is extended. You want to buy when it bounce off the 10-day. That's usually a better way to buy. Now, talking about that, so that's one way to buy is buy and pull back rebound. Second way is to buy on breakouts, right? If a stock breakout and that's been working mostly in the last 2 weeks. Most stocks break out and they keep going. Now there's always some that comes back. So, but that's but you know, so yeah, like if you feel like that's another thing. Like Jim Roppel, he's more he's 40% invested now. Now, just so you know, he been less than 20% the whole year last year. Okay, in the last week he just jumped to 40%. So he's also following the market trend, right? He doesn't believe he still doesn't know if this is a true goal, but he said you have to follow the market. You have to whether you're wrong, you just have to know how to cut your loss, right? If you're wrong. And so right now, like, but for me, I feel like there might be time to pull back a little bit. Um, I don't know. We'll see. Maybe Monday will be another bad day, and then Tuesday maybe I don't know. But we're more than halfway. At least the big caps have mostly reported. The first sign of importance that came out was when the banks first reported. I mean, the banks' earnings were so bad, like in terms of their forecast. Not only that, they came out and some of them even missed, right? Uh, the already back. But yet the stocks doesn't go down much. I think the only one that went down was like Morgan Stanley, and even then they bounced back. I think. Um, yeah, there was this one. I think it was right here. Sorry. Yeah, right there. This day. Look at this. Look at this bounce back. Like it was. Look at this morning. It report that day. It fell in the morning and it closed at the top. I couldn't
Wow.
believe it, right? And it happened for so many bank stocks, like big bank stocks, right? That day, I think. Anyhow, that was the first sign of bullishness. That despite, like, I've never seen this before, like all these misses, and they still bounce back. And that's why more and more analysts are turning bullish because, like, this is not normal. Okay, um,
Mhm.
this is not normal. You can't, like I say, you can't fight the market trend. You know, like that's the most important trend, right? Some people is like don't fight the Fed, but honestly, that's what happened. What happened on Wednesday? What happened? If we go back to the Nasdaq, right? Wednesday. This is Wednesday. Look at that day. This is the day the Fed announced interest rate hike. What did it do? Of course, I think it was afternoon, right? Like when after the
Mhm.
announcement, it started to move big. But my point is, and this is the part, like, you know, the one thing that Fed I think really acknowledged this time was that there is now the word disinflation, meaning inflation is coming down. And he said so many times, I think people say he said it at least 10 times. So I think the market was so happy that the Fed finally acknowledged inflation is no more uh, a concern. And a lot of analysts, including Jeffrey Dunlop and a few other pronounced analysts, they all say the same thing. It's like when you listen, I didn't listen to it, I was away that day, but from the commentary, those analysts are saying when you listen to him talk that day, he said that there's a very calm demeanor, basically saying that people are saying he's confident that he's going to manage this disinflation, and that's good news because you see the thing is the next day it bounced even more because of what happened the next day was I think it was which company Meta, right? Meta Spark, same thing, right? It it wasn't best earnings, but they're doing a lot of things to cut down costs, and also their user numbers are still pretty good. So it bounced like crazy, right? But Friday was the job numbers, and it does raise, I don't know, I haven't checked yet. The Fed fund rate future, we can do it in a second here. But because of such a strong job numbers, people are saying now that I think they have to raise in May as well, not just March. So, but again, you have to ask yourself the question, like even two more rate hikes, is that important to the market? Like how much more of a difference is it going to make, right? as long as the Fed acknowledge that inflation is coming down. I think to me that is the most important. So let's go take a quick look here. Um, so here, March, 82.7%. So right now we're at current, right, 450. So yeah, so it's going to raise a quarter in March, May. So that means it'll be 475. So slightly higher now. Like in May, you see, this is slightly higher that it'll raise a quarter because of Friday's job report. I think this was lower before Friday's job report, meaning
Hmm.
May they won't raise. But now, because of Friday's job report, they may raise. Now, like I said, market did come back down on Friday, so because of this news. But we'll see. I don't know. I think it's more important that um like so between now and March, I don't what was the date? March 22nd. So that's more than 1.5 months away. That's a long time, 6 weeks. And we're gonna have two more CPI reports and another jobs number. So I don't think this is done deal yet that May will raise again. So that they have time to decide, right? If CPI come down, continue to come down, which might be, uh, the question is whether it's fast enough. And so far it has been, right? It's been coming down pretty fast. So that's why the 10-year yield is like a really good indicator that um, also well this after Friday's job report the mortgage rate jumped back the long-term mortgage rates um, and that was a hot sector, right? Everyone's talking about this, right? It's the home builders are just rocketing, like we just jumped to like one or two stocks here like PHM. Look at this guy. I was trading this. Look at this guy.
Hmm. Oh, wow.
Right after the earnings, it just like going nuts, right? Okay, so now it's starting to pull back. This is now looking like a climax, right? So I don't know if it'll pull back to 10-day before it goes further or 21-day. Hard to say. But the home builders are just a good indicator that um, you know and they're saying like the mortgage are starting to pick up again because but Friday the mortgage rates went back up. So like 20 basis points. So just in one day. So um, not good news, right? But we'll see. It is really hot, so I don't expect it you know to go up every day. Especially this is like a parabolic. Whenever you see a parabolic action, usually I would take profit right away. Like at least start to. Okay. Um. So that was just a quick touch point on the interest rate and what happened this last week. Trying to think, is there anything else macro perspective that we haven't talked about? Do you have any other questions about macro stuff?
Basically, yeah, I missed the highlights of this meeting, the last meeting. So if you could talk a bit about it, though you have already. Yeah.
Yeah, I didn't listen to it, but like I said, I think the Fed raised a quarter point, and he just basically like I say like most analysts are commenting that he's just more calm and collected, like almost like he know he's got it right this time. And many analysts agree, just so you know, that he might be right this time, meaning that it's a soft landing, right? That's why this market has been rallying since the beginning of the year. Is this idea that maybe this is a soft landing, and so why is this important? Because the market already priced in a soft landing in 2022. That's why it corrected so hard.
Hmm.
So if this is true, then this may be the beginning of a bull market, right? That's the you know it's still like for most analysts why they're bearish is because they don't think it's a soft landing. They think that it will be a hard landing. But the evidence are pointing towards more of a soft landing, right? At least from my perspective, I think so. Like you look at the job numbers, why is the economy so strong, right? Why hasn't those 4.5% raise in interest rate slow down the economy? And not only that, you have the mega caps laying off like crazy, well, 10%, let's just say most of them are lay off 10%. But yet the job numbers still coming out really strong, right? And that's by definition, to me, a soft landing, is that they have, even though they raised rates so much, they have, the market was able to withstand that rate so far. Now, you have to ask yourself, is that going to last forever? Probably not. That's why the market, if you go back to you know, to this this Fed future thing. Hold on, I don't know why I can't click on it. Oh, so hold on a second. I don't know what's happening here. Something's frozen my screen. What happened? Escape. Okay. Oh, I don't know why my screen is frozen. This thing pop up here. I don't know what I press, honestly. Hold on, just trying to figure out. Holy crap. Let's see if I can bring up Test Manager. I can't even do anything. Let's look further. June. Okay, so let's say there's a rise to 5, right? 5%. That's where the Fed wants to go to. And I think they will. I honestly think they will go, because especially with the job numbers so high, I believe they
Mhm.
will raise March quarter point, May quarter point, unless something's changed drastically. But I don't think so. I don't think, like, I really don't believe anything will change. I think job numbers will remain strong in the next few months. So then we have 5. Um, okay, it's June. Oh, interesting. Yeah, yeah. So this is the right number here. 450, 475. Oh no, that's not right. Back to May. 450 to 475 to 5. Oh, this is weird. So in May, it's saying it's going to go to 5, right? 5 to 5.5, 5.25. And then June is saying it will come back down. That's incredible. So I don't know. This is maybe a little bit weird now. I think maybe it's just an indecision. So now, see, in July it says 5 again. So there's something weird
Mhm.
in June. I think maybe there's something wrong. But so let's just say they didn't do anything. Let's just say they stay the same. I want to see what the future look like. So it's still 5 in September, November. Okay, that's when you see, now it dropped
Mhm. Mhm.
in November. So they believe, yeah. So they believe, see, November dropped to 475, and then December dropped to 450. So the market believed that the last 2 months of the year they will cut. That's what it's believing in right now. And that's most likely, again, um, it's this I mean, of course data can still change, this can still influence this prediction here that the market is playing on, but honestly I've been watching this for the last whole year. It's been quite dead on, unless there's, like, say, a drastic change in data, right? If there's no drastic change in data, the Fed, that's one thing Fed has done, is that they have been following the market prediction almost to the T.
Mhm.
So what that okay, so why is that important? Because it tells me that the market is already pricing in this, right? The market is already pricing in that March, May, they will raise a quarter point. Comes November, December, that's when they'll start decreasing. This is what the market is pricing in today. Okay? Does that make sense?
Yeah. Mhm.
Now, what I say, unless something drastic change, you know, you never know the future. Um, I will follow this trend. That's where I will follow. And so that's why, you know, um, all the ARC stocks have been jumping like crazy. All the growth stocks that the previous leaders have been jumping like crazy. And because they believe that, Fed will reduce rates eventually. So those
Mhm.
are good for a growth stock environment, right? Especially, yeah. Anyhow, that's kind of the idea. Um, Yeah. Any other question about this macro stuff? It's quite interesting.
Yeah, no, it sounds good.
Yeah. But like I say, I still like what Eric Johnston is pointing out. But I think at the beginning of a bull market, it runs well, but that's because it's at the beginning, right? It's kind of like what Mark Minervini described as the lockout rally. He called it the lockout rally in his book. Whenever a bull market starts, there's always a lockout rally where people just couldn't get in. They're so fearful, they don't want to get in, and also they want to get in, but then the price keep jumping so fast. And so they never get it, and that's okay. That's why it creates a sense of FOMO. But at some point it's gonna pull back. Like no stocks go up forever, so they're gonna pull back, and that's when you study those stocks, and if you miss it, that's okay. Generally, it's fine. There will be another maybe we're gonna have a pullback, in mid-February. I don't know when it's gonna start, but I'm just saying usually in mid-February there's some sort of pullback. So um, it might give you a chance to get back into the stock, right? So, um, yeah. Does that sound good?
Yeah, yeah,
Yeah, yeah.
that would be interesting.
So I'm gonna jump to um, so I'll tell you what my strategy is, right? Now I missed most of the first part of the rally, just so you know, because I was bare. And the other thing I was really conscious of was I didn't want to buy stocks that are about like that are reporting like that haven't reported earnings. So I make the
Mhm.
decision, like which was a bad decision, just so you know, that I didn't want to buy too many stocks before they report, and so I miss out on some of the leaders, right? So we go to using the McBoss tool, and I'm just gonna jump. So I have just letting you know what's happening on the tool side. There's move,
Mhm.
which is the old one, and that was and if we download this, I miss a lot of these leaders that jump uh,
Mhm.
because I wasn't buying stocks, right? So let me see. Okay, I have to refresh. I think it wasn't. Oh, there you go. It refreshed. Download. Okay. Um, yeah. So most of this has run well. We can look at a few of them, and then I make another list, which is sorry, give me a second here. Press something wrong. Okay, so this is the regular list that we were looking at before. So this is all the stocks, right, that I follow, but I haven't been following this as much. But let's just jump to a few of them because I want to see where they're at. So like for example, like this is a biotech stock, the MDGL. There's many more that I haven't had. So yeah, this one is kind of starting to fall now. So it's kind of on a downtrend.
Mhm.
But this was a leader before, so one thing I like about this chart is that it went up so much, and one thing I always like monitor is when they fall, how fast are they falling, and also how tight are they trading, and this is tight, like because you have a 3 4 day gain of like over 100%, but look like
Mhm.
it, it hasn't really give up much. And
Right.
so, but it is falling right now. So again, like I wouldn't be buying. I'm just saying I'm monitoring. You would be monitoring this, and you can see the earnings coming out February 24th. So right now, my strategy is not to buy any stocks that are haven't report. Um, Basically because why there's so many stocks already reported. Why not just buy those ones, right? Like there's no
Mhm.
risk in those because of the earnings. Because if earnings come out and they're really weak, it could tank, especially stocks that have
Right.
ran up a lot. So that's the problem with buying during earnings time. So you know, like if I were to like let's just say I look back and let's say I did buy those stocks, I would be buying them and I would ride the trend, and then before earnings, if I have I would sell, and if I have profit, I would take most of it, right, and leave some just for you know for good luck or something to test the luck, but I wouldn't be buying into earnings because that's very risky. Um, so that's
Mhm.
MDGL. Nine. So none of this has reported yet. So nine is a very strong stock, energy sector. But they have come down, right? All the energy stocks have come down. So this you see this is what's happening. But you have to understand this is a really strong stock, right? So this is the first run. Now it corrected, and then it did this second run. This is the second pullback now, right? So this might give you another chance to get into this. But again, this is March 8th. That's 1 month away. It's up to you, right? If it does bounce back from here, let's say right here, you buy. I would hold, like I said, I would hold this until near that date, and then I would sell if I have take the profit or whatever. Just have to sell before the earnings news. But if depending on how much gains you have, you can decide leave some on the table just to see if it continue. Even sometimes the earnings can be good and they can jump even more. So, but just taking the again, following the strategy of what Mark Minervini described is, if you have gains, you should take it, right? Um, Again, this is for obviously short-term strategy, right? So yeah, but this stock is powerful. You can see this is very strong. Like I know the earnings are crazy, like sales are crazy. Look at this, 80%. Earnings are starting to turn positive now. So, but again, we'll see. I'm sure the market has high expectation on this. So there's quite a bit of biotech stuff, but the overall health sector hasn't done well this year. So that was something that I was surprised, and that's because there's a big shift. Like it seems like money is rotating back into like growth-oriented type of stocks, and they have been selling out of like more defensive like health sector. So this one is pretty good. This looks pretty good. Look at this, right? So this is probably a little might pull back a little bit more before I continue. So this one looks pretty good. Again, this one's in March. So obviously, biotech stocks is always the hard one because they don't really have good earnings, right? Most of them. So at least not yet, right? So like CPRX was one of the one that I think disappointed a lot of people, right? And this was a really strong run, um, and then it fell apart because I think another company are competing against them, and that was devastating news for them. So this is that's why if you buy biotech, it's kind of hard. Like that's why some people prefer buying like IBB or XBI, um, j- you know, just to not take the single stock risk. But here's what's happening in the sector, right? It's been building a long base sideways. It's very strong. Like look at this. It's like it's staying at the top half of the range. It's just taking time to eventually break out, right? So when this happened, like like I feel like this is what's happening. So the growth stocks taken over in January, most likely they will pull back and maybe even pull back hard. Okay, so that's the scary part because of all the FOMO and people trying to get in soon. Maybe it might still run this coming week, but like I said, I think by mid February we will see a pullback on growth stocks, and then I feel like the stocks like the biotech and stuff like that, the more defensive one. Well, biotech is not really defensive, but just in general, part of the health sector, all the health stuff has been kind of more defensive, and money has been rotating out, and maybe this might break out and take the leadership. I don't know. In the bull market, that's what happened. You're gonna have like for example, growth stocks ran up like crazy, mostly tech. Um, they're going to pull back, and while it pulls back, some other area is going to take over that leadership, and
Mm-hmm.
that's what happened in the bull market. Constant rotation, right? And constant rotation, and uh, and that's how the bull market continue up and up and up. You know, if everything was going down, it won't look like a bull market. Is what I'm trying to say, right? So, and same thing, if everything's going up at the same time, like when it falls, it's gonna all fall hard. So this is actually a good sign of a bull market too. Is that like they like they're not falling apart. If this was falling apart, then I would say yeah, okay, right? But it's not. So look at another ETF, XPI. This one, look, this one is trending upward nicer, but same thing. It's but this one is this is in a range too. I don't know. They're both good. Like I don't know which index is better, but they're both pretty good. They're both um, this one's pretty good too. This one's trending. This one at least is trending higher. But you see, it still hasn't broken out yet. Same thing here. But you can see how long this base is. As soon as it break out, it's gonna be strong. That's the beauty of long basis. Because all the people who have sold in here, who couldn't just hold on no longer, they just give up, and then once it breaks out, it's gonna be strong. So watch this guy. So yeah, if you don't want to play individual stock, which is more risk, then do that. So I just want to keep going down. ACLS, oh my God, I miss this guy. Like, it was on my list, but I didn't buy it. Again, I didn't buy much stocks because they haven't reported. So this is February 8 coming soon, right? So this is already run up well. Like any stock that have run up well into earnings is always riskier. Of course, they can do a climax run and just go like this on earnings day, but that's usually when, either way you would sell, right? You either sell some before the earnings day and then leave some for that day, but you could also have this going down like that. So that's why it's risky. So I usually would take like 80, 75% of the profit if I was here, but leave 20, 25%. But also depend what your strategy is, right? If you want to play longer term and hold on to stocks in this bull market, then maybe you just want to sell half and leave half kind of thing. Yeah, so this is coming out soon. This is one of the strongest chip stock. AHRS. This one, retail home furnishings. Yeah, this name I think most people don't know about it. Still, $14 stock. Obviously, still pretty small, but it has a nice uptrend. March 9 is the EPS still. Okay, this guy, ALGM, another chip stock. This is okay. So this has reported. I'm trading this stock in and out. So I already took my gains. I think I'm out of the stock. So now it's extended. 4 days run. 1, 2, 3, 4.
Wow.
Right. 1, 2, 3, 4. 4 days run. Like already 23%. So I mean, at some point it's gonna pull back. Like, this is the 10-day line right now. So yeah, it's very risky to buy here. But these are this has reported, and let's go look at the numbers. Look at these numbers. Wow. Increasing earnings. Look at the sales. Increasing. This is potential big leader. Right? I like if like I say if I'm starting a longer term portfolio, and I think like I wouldn't buy it here for sure because you can get shaken out so easily if it pulls back. So this is the 50-day line, right? So for longer term, I like to look at the weekly chart more. So if I were to buy this for longer term, I would like try to around this level right here, right? Because 50 days usually, and you can see right like on the weekly chart, 50 days seems to be the support. Like sometimes it crosses here, like a little bit here, but it generally on a weekly basis, you see it didn't close below the 50-day. That's the funny thing. Look how strong this is. It went under it during the week, but it closed above it by the end of the week. So so that's where I like to trade for longer term. It's 50 days. You know, yeah. So, for long. Also, the other thing that most traders do, like for medium to longer term, is they trade like uh around the core position. So let's say you start off with and you can add to it as time goes on, right? Like every time you can do that too. But let's just say you didn't add, you just want to trade around it. Then let's say you start with 100% position I don't know where, but let's say a proper point. And then as it goes up higher, you take some profit, like maybe you trim like 20, 30%. And then as it move back down, you buy back those 20 to 30%, right? So depending on how you want to trade your core position, maybe you take you always keep 50% in there and trade the other 50, something like that. You could do that too. So a lot of traders do that. Um, because they believe in that stock, right? So, but you still need to have a cut loss rule in case, you know. So going back to the bulk earlier, we basically, this is a base, this is a base. So let's say this is stage one, and you can see IBD also named it stage one. And let's say this is the beginning of the bull run. Now it could run for, let's say, a year, and within that year, it's, let's say, that's what Mark calls it, phase two, which is the bull run. And during that bull run, you're gonna have lots of pullbacks, and every time you pull back, it gives you an opportunity to add, or it gives you an opportunity to trade around it. So that's kind of like the idea. So this is a really strong stock, like unbelievably strong. I would definitely keep this as a potential, and it's already reported, right? So, but this is not a good entry point because it's run so well. So yeah, this right here, see, this is the pattern here is this cup, long cup
Mm-hmm.
with handle pattern, and then even it broke out a little bit here, it pulls back, one more last test,
Mm-hmm.
and then it breaks out, it tested the buy point again, but that's a fairly minor test because it didn't even go down the 10-day much.
USD, yeah.
Yeah, so this would be like the last time you could have bought it. And now let's say you did buy it there, now you're up 23%. You have a really nice cushion now to hold it for a longer term,
Mm-hmm.
right? So you buy it around here, you can hold it now for a longer run because this thing's gonna pull back, there's no doubt. And then you just hope it doesn't pull back 20%, 23%, and then it will keep running, right? So that's kind of like the idea. So I'll wait for this opportunity when it pulls back, and then maybe I'll take a longer term position. This is really strong
For
stuff.
the list in the tool, which date you are looking from now?
I'm still counting from October low.
October lows.
Yeah,
Okay.
because that seems like the most the yeah. See right here, it's still the low for that was like if again this assuming that was when the bull market started.
Mm-hmm.
Um, you know, uh, the market will like the technical people will never admit it's a bull market until it hit new high, right, on the index,
Right.
and so it's still a while from that, right? So and I don't know when that will happen. Like if you look at Dow is not that far away. It's probably the closest one, but that's why I said it's almost like, see, the Dow was the first one to run, and
Mm-hmm.
now you can see what it's doing. It's holding up really nice, right? After all these gains right here, it's holding up so nice, right? So the next run is gonna break it. You know it's gonna break it if it runs again. That's probably like again, if you look at the timeline, like it's look like the story of the market is correct. So right now it's already February. So February and March is probably, like I say, I still think it's a good, like I think, I don't know, because there's so many bears still. I feel like the market could run pretty strong the first quarter this year. That's my take, especially after seeing what happened in the last, this year. I feel like even though Dow hasn't run, but like I said, it's building a nice base right now. So all these stocks, and we will look at some industrial stocks. Like for example, I always talk about Caterpillar, right? Look at the Caterpillar. Look at this run,
Wow.
right? From the bottom, right? I'm pretty sure this is October bottom. And look
Mm-hmm.
at this. Yes, it's weak this last week. It's sold off because of the earnings news. But so the question is, can this stock hold up? Because I believe this is the Dow. representation.
Mm-hmm.
Like, it is not only a component, but to me, this is the best representation of the Dow. So if Caterpillar can hold on and build a base here and then run again, and it will probably follow the market, like the Dow index, that's me. That to me, that's the good sign. I don't know how many weeks it's gonna build a base here. This is what I want to see. Usually like 5-6 weeks. If we build a base here 5-6 weeks and hold on to all these gains since the bottom, this is bullish. This is bullish pattern. So coming back to Dow, like I said, it's not like Caterpillar already hit new high, but the index hasn't, right? So that's why I
Mm-hmm.
said when the index tried to break new high, no doubt, Caterpillar on this, large cap leadership, it's gonna go higher. Um, sorry, I can't remember. Yeah. So sorry, what was the question again? Um,
No, basically we are still tracking from the
oh
October
yes,
low.
yes, yeah,
Yeah.
yeah, yeah, and that's why I'm convinced that it's a bull market. Because why do I say that? I think, like, remember October Fed was hawkish, November Fed was hawkish, December Fed was hawkish, and hence the Nasdaq was doing poorly. If you go back to Nasdaq chart, right? Here's the October low, and look at it. But what happened? Even the last one, December, right? It couldn't make a new low. It has
Mm-hmm.
all the chance to make a new low, but it wouldn't. And October low still stand. And hence, third time is the charm. 1, 2, 3. Three Fed meeting, boom. And this time, look at what the market did. It didn't even care no more. Well, it did care. The Fed did basically acknowledge inflation is done. Well, not done, but they're in the they're in the right track, right? And that's why the market, I think, is correct this time. You know that eventually they will stop, and eventually they will cut interest rate. That's the market's prediction. Don't fight the market, right? That's why I said follow the market trend. We don't know who's right or wrong. It doesn't matter. It's all about making money. Does that make sense?
Yeah.
Yeah. But you know, don't FOMO, right? I think right now is the biggest temptation to FOMO right now. So like ALGM, man, I trade this stock and I make good money on it, but I didn't have a long-term position right now, right? But if I do start a medium term, and I want to, because I feel like I believe now, right? Like, maybe I'm wrong. That's okay. Cut your loss. Remember those three rules.
Yeah.
But if the market is right, and we are starting a bull market, this if it can run 4 days 20%, imagine what it can run in a year,
Yeah.
right? So I think a lot of people miss that, and they're fearful that this will happen, right? If you go back to Zoom, I remember Zoom. I I I still remember so clearly. It was one of the leaders I was watching coming out of the 2020 cycle. But what happened?
Mm-hmm.
I'll show you. It was so hard to catch this stock because um, look at this. This was the gyration I was dealing with after it breaks out. This is the breakout point. Look at
Mm-hmm.
this. Look at how volatile it is,
Yeah.
right? And then it went up a little bit, and look at this. And this is what I'm saying. Don't FOMO. Imagine you FOMO right here. You are getting killed right here.
Mm-hmm.
And then it goes up here again. It did it again, right? This 3 times it cut you. I got cut so many times,
Mm-hmm.
right? If you like, for me, that's why I said in the beginning of a bull market, don't worry about missing those leaders. The first 3 months of a bull market is gonna be choppier than you think. It's gonna be more volatile than you think. But what it's gonna tell you is that these are the leaders, because every time it falls, it didn't make new low. See that?
Mm-hmm.
That's how you know. That's how you know that these are the leader. It makes higher high, makes higher low. That's the definition of a uptrend, and also
Mhm.
if they have strong fundamentals, those are the leadership we want for. And this is where it take off. I think it was like, yeah, by May or June. I'm already out because I just couldn't deal with it. I
Yeah.
was already out. Like, but I just didn't have that patience anymore. Um, I lost it, you know. So like I said, don't FOMO. You will always have another chance. And also, depending what kind of trader you want to be, um, you know, it's hard. This is why it's so hard to hold. Like, I mean, this is the one stock that did this. Not every stock did.
Mhm.
Some that's why you have to understand how you stock trade too. So, but I think by if we show December, the big run happens. Yeah. So like right here, this is the big run started right here. That like where that 4 days jump, and then look how tight is trading now. Look, very different than here.
Mhm.
This is like the true buy point right here. This is where it becomes normal to actually buy and hold, right?
Mhm.
And even this drop right here is to me is very very subtle, right? 281 to 230, $50. That's 20%. So, but you were up quite a bit, right? Right here, 150 to 281. So you know, but this is not easy stock to hold. But let's just say you went from here to here. That's a good game. Like even if you did like because this is for sure a climax run right here. So this is what I was saying. You have earnings came out or something, or some news that came out. It jumped like crazy.
Mhm.
Look at what happened, right? It falls back all the way to 10 day. Look at that. The 10 day is like it's like your friend for buying. Okay, always look at your friend and say, hey, 10 day friend, am I near you? If I'm near you, I should think about buying. If I'm not near you, don't buy because you'll probably be buying extended. Okay, so
Mhm.
those are important points because sometimes I the only time I would buy, and I'll show you some of them that I bought. Like, for example, I bought ATGE, I believe, on Friday, and I reset it to today's date. I don't even know this stock well, but it was reporting. Oh, it's an education stock. It was reporting, and what was it? Why did it reset? Okay, I don't know if this is a good stock or not. I'm just trading it. But here's the thing: the only time I will buy on the gap up on like
Mhm.
news like this, earnings news, is when it's within the base, right? And it's
Mhm.
building the right side of the base, right? So because what happens is that when stocks move on earnings or news or whatever, and it's building the right side of the base, the tendency for it to rise is much higher because it
Mhm.
wants to break out. That's what's happening. Versus, like, I'm not saying it won't pull back. Okay, I'm not saying that. I'm just saying, you know, it has a higher tendency to move up. The odds are in your favor. Versus a stock that gap up at the end of the run, the odds of it coming down is much higher, right? So that's what I like. I like to trade stocks that do this on the right side of the base. Even before a breakout. Sometimes if it's breakout, that's fine too, but you will run the risk of pulling back higher because they
Mhm.
usually want to test the buy point again. So if you buy way out of the buy point, um, you run the risk of coming back 5%, let's say, right? You just have to understand that. But it's fine if you have a looser uh, cut loss rule, and that's the thing, right? Because it does happen, but right now is a good market condition, so it doesn't happen a lot. Sometimes it'll break out, and you buy like right here, and then it,
Mhm.
it closes at the bottom here. Now, is that bad? No, it's nothing bad. It's just that's just how the stock reacted. But if you have a cut loss rule that's too tight, you'll be shaken out, and but you also have to give it more room to move in that trading range. And usually by the second day, that's when first day I'll give it a more room, like even 10% on the cut loss rule side. It's not a good thing, but if you want to trade those kind of stock, that's what you have to give it. And then second day it will trade tighter usually,
Mhm.
and then you can move the stop loss up, right? Now that hey, it already tested that second day of low. and you know where that low is, right? So, um, those are strategies you can, kind of help, right? Like, I don't know what's gonna happen to this stock, but it clearly break out and high volume, and like look at this, 3 days of volume right here, even before the earnings. So those are good signs to me. Um, uh, it's overall the trend is good, right? Here's 50-day, here's 200 days trending up, 200-day. So when 200 days trending up in this environment, because we're still early in the bull cycle, right? If this is a bull cycle, if 200 days trending up, it means that institutions are buying. Like there's no doubt about that, and that's what I like to see. Like 200-day is like very important, you know. Um, so like I say, I don't even know this stock. I never even heard of it, but it came up. It came up, and I'm monitoring it. Look at this earnings. Look at this. Wow. Now sales did go down, didn't go up much. I don't know why. But earnings are going up nicely. So to on slightly smaller cap stock. So yes, I don't know. So it's a good trading stock, but I wouldn't say this is a leader for sure. But ALGM is nice. So it's 8 billion cap. I like stocks around 5 to 10 billion cap for leaders. Obviously, the more the better, just
Hmm.
because you know. Now I'm gonna jump to Tesla real quick. Just I like Tesla's like chart, but the problem with me, like I just couldn't buy it because the earnings has gone down. And again, this is the same as Netflix and Meta. Like I couldn't buy those stocks because the earnings are just not good for me. Because that's I have a strict criteria. So it's forecast 19% drop in earnings, which is again, if this is a turnaround story, like back then Netflix, Tesla, 2010, I still remember clearly. Those are stocks that weren't making money. They were, turnaround story, right? They're gonna make money in the future.
Hmm.
And same thing with Amazon, right? It's okay if you believe in that story, then you buy it. But for me, I just like, I just want to I want to trade very strict. And again, nothing wrong with these numbers. It's just slowing down. That's all, right? But if you believe in their turnaround story, um, then yeah, then it might have a strong future. It could keep going up. You know, but for me, I'm a numbers guy, and I'm very strict on that. So, like for me, I just like I don't want to you know deal with that kind of like if the numbers not there. Again, I'm not saying it won't be there. The numbers could turn well big time. So, but I'm just saying like well, that's the reason why it's not on my list. So if you're looking for that, does that make sense?
Hmm.
Yeah,
Yeah, yeah, no,
yeah.
makes sense. Yeah.
But yeah, no, it's from a price perspective, it's doing really well, right? So, LTH, this is a newer name. This, I believe has reported. Let me see. Has it reported? Maybe not. No, it hasn't. Yeah, this one is I think it's like fitness, right? And March 10th. Yeah, look at this. This is probably a newer name, and because Planet Fitness was the other one that most people have heard of, but this one is, oh, maybe it's not new, but it's maybe hasn't had a run before. But look at this one, it's so strong. Holy cow! Look at all this volume. Wow, right? Yeah. So there's lots of so one thing I've noticed, right? Even though earnings were really bad for many stocks, like especially
Hmm.
well-known stocks, but I find a lot of stocks like this that are doing well. And like look at this profit now. Sales continue to go up, right? So you know, so something is turning around for this guy, and it makes sense because everyone now is going to fitness, right? Everyone's going to travel. Everyone's going to like, fitness, doing things, right? And okay, talking about this, okay, I I miss out on Peloton when it moved on earnings. I miss it.
Hmm.
I was gonna buy it, but I was so slow because I was doing something else. By the time I came back, it was up already 20%. I was like, forget it. I don't want to chase it, right? But look at this. It's hard to see. This is a problem with buying stocks like that. Is that I can't even read the chart properly. It's so
Yeah.
like like it's so hard to read because it's just been beaten down so much that the scale of the chart is just screw up. But on the day of the earnings, I was gonna buy it because in the morning it was only up 10%. I say okay, and like I told you, I don't buy into the first half hour or so.
Mhm.
So by the time I think I came back around half an hour later, it was up 14%, and then by I think by again in an hour, it was up almost 20%. So I was like, forget it. Like I don't want to chase it, but it obviously went up more. Okay, in the couple of days after. So and then Friday it fall back down a little bit. So I mean, like I said, they're gonna give you a chance. Like this has good earnings. Like this is a turnaround story too. Um, like the earnings, the the earnings prediction for next quarter is much better. Basically, it's positive, meaning like it won't lose as much money.
Mhm.
It's not profitable yet, but it won't lose it. That was the big change, I think. Let me see if I can find it. Yeah, 79% improvement. That's pretty good. That's pretty good. I'm not saying like it's like I say it's not super um perfect, but it's not bad. So last year at this time they lose 227. So 97%. Actually, no, that's not true. 97% means it will be uh it will turn positive. I think. No, hold on. No, it's gonna lose like 20 cents, like 97% of this, right? 79%. It loses like 40 cents. So it's gonna be a big improvement.
Mhm.
Um, I don't know about the sales. I don't have the forecast sales number, but it has, you know, like look at this 616 to 792. So it jumped back. It was going down, and then this
Mhm.
this quarter to quarter, like year to year is still down, but quarter to
Yeah.
quarter is move up. And one of the things that I like, about the story is now they're not focusing on selling the bikes. They're okay over time. They won't make money on the bikes, but they're gonna become like a Netflix, right? They're gonna sell subscriptions, and apparently a lot of people like this subscription model. Uh, so that's how they're going to grow going forward. And I like that story, at least for now. I don't know if they'll be successful a year or two from now, but I think in the
Mhm.
next year or so, I think they'll be successful at least to some degree. And so I like it, right? And this stock has moved. Again, it's really hard to read the chart, but now it's easier to read, so I'm gonna let it settle. It's gonna probably pull back and build some sort of base here.
Mhm.
um, and then it'll be much easier to read, and then I'll probably take a position. I don't know, like at least for trading for sure, but I don't know about long term yet. Probably not, because there's just so many good stocks, like it's crazy. But I like Peloton, at least for that result. Let me see, it should be in here somewhere. Huh? It's not. Okay, it's not in here. I forget to save it. Maybe. Okay, yeah, I didn't save it. But if I show it here, it's number 10 on the list.
Mhm.
So yeah. Um, eight just reported on Friday. There's so many good stuff. Like, I don't even know. We won't have time to go through that, but yeah, I can go through quickly just to
Wow.
get a sense. But eight is again one of the beaten down stocks. Look at this earnings, really strong still. Like this is I don't know why you get beaten down so much, even though it's a strong stock. Maybe I don't know. It's all see. This is really good. Like I mean, it's not big earnings, but they're not losing money. And I mean, sales have a little bit stagnant, but still they're not bad. But now I think it's turning around, right? Like
Mm.
I think next quarter, let me see, eight. It's really small cap, 7 million. 80% growth. So if we compare to now, what's the number? 5 cent. It will be 9 cents next quarter. Yeah, 80% of that, 9 cents. So yeah, so it's growing, right? 5 cents to 9 cents. That's pretty good. So yeah. So enterprise was probably one of the strongest sectors this week, which is very interesting. EDU. So this stock, there's something about this stock that I like a lot. I have traded in and out this stock a few times now, and each time, most of the time, I was able to make money. And this is a China thing, right? I think. Let me see. Yeah, China. And China is opening up. Right now it's pulling back. Like
Hmm.
it's pulling back, but this is a nice run here. Pull back. Like this is the pattern so far. Um, I like this stock. It's a China stock. Look at 200-day trending up, 50-day trending up, really nice, right? And look at this. This is the base I was building. Like really nice base. I really like this stock. I would say from a technical perspective, I like this even more than ALGO. Because it already been tested so many times in the base here, and also I like how the 50-day and 200-day is just trending up so nice. Like see, this is what happened, right? So this is the beginning of the bull run. This is the first base, and then now this is starting the big run up. So I really like this stock, and I don't know. I feel like I should take a longer term position on this. And if China economy is doing well and they're supposed to, going forward, this could be a huge winner, huge winner. And this stock has run big before. Like I know this is a bad look, but every China stock has done this, right? But
Hmm.
if you go back, I think I can't remember a long time ago. Let me see, 21. Yeah, see, this is 21. 21 right here. Like this stock is very choppy. It's very hard to yeah, I think this is more of a buy and hold stock. The more choppy it is, the more like it's still a nice uptrend, but it's just that you can't trade in and out. It's very hard. I have surprisingly I was able to make some money trading in and out so far, but I'm just saying it's probably not the best idea just because the chart is just really hard to control. Like it's just more volatile than usual. It has more pullbacks. So here, see, I'm also so the other thing that I want to do now is try to put my trades in to the chart, so I try to learn what I'm doing, as why the as I look back at this, as you can see, I bought here, sold here, bought here, sold here, right? Like I said, this one I was able to make a little bit of money trading in, but
Hmm.
um, but the point is I want to study. If I like, for example, I like this stock a lot, but I just couldn't make money trading in. And so then, but I believe in this stock. So IBKR is a financial interactive brokers, right? That's the tool
Hmm.
I'm using. And I really like like I like the fundamentals. Like it's growing. Look at this. Okay. Look at the sales. Look at this. Crazy numbers. Okay. And where is it on the technical side? Not much movement, right? In the last year. But what's happening right now? Builds a nice big income.
Hmm.
It's still volatile. Don't get me wrong. It's still volatile. That's why I couldn't make money trading in and out. But but if you look at the bigger picture, this is the beginning of this run. You can tell, right? Because look at this trend line right here. Look at the lows, okay? And look at this 50-day just starting to turn up. Look at this 200-day. It's already turning up. This is exactly what you want to see in a big winner. But
Hmm.
like I said, every time I trade in, it pulls back. It's look at this. 3 times now I did. No, 2 times. Probably I did another. Yeah, this one. I think one. I did one this week. I got shaken out here. Look at this big pullback. I couldn't believe
Hmm.
it. I got shaken out. Look at Friday though. Look at that. Right? It's just I know it's hard to trade in. Reminds me of Zoom. It was so hard to hold this stock. Like, but that's why if you trading in and out, it's hard. But if you maybe taking a longer term approach and give it more room to so you can see it constantly make higher lows, but it's just that those lows are going to be tested, right? So this is probably the next low here, right? So you just need to leave enough room for it to not shake you out, right? So you have to give it more risk. But
Hmm.
just again, It's a different trading strategy, but I love it. It broke out, closed strong. This is the first week it closed strong above the buy point. I love this stock. Like I don't know why. Like even though I didn't make money short term, I like how this is trading. Look at this giant volume this last two. Like look at this.
Hmm.
Like
Almost a
some
year of the cup, right?
yes, like
Nothing
really long base. If
more than
the the other thing I also noticed is in the bull market. Um, I'll talk about something more about financial. There's something about financial that I really like. But this is a trading. This is a broker, right? One of the things that happen in bull markets is that brokers seem to do really well all the time in the beginning of the bull market. I don't know why. Like in the first year I'm talking about, right? Of a bull market. There's something about brokers, they always do well. But not all brokers are the same. So I like they always say Charles Schwab in the US, that broker, I don't remember, Bill O'Neill made a lot of money off it in one or two bull markets. It's just one like because they were the leader, right, in brokers. And like I told you, I always like interactive brokers, but they have never been like the leader that I always thought like Charles Schwab, where you can make 10 times your
Mhm.
money. Um, I don't know. Maybe this is this time. Like I said, this is impressive numbers. I'm just saying. Okay, 2 quarters in a row, triple digit gain in sales. That's crazy, man. Um, they
Mhm.
and I heard the president came like he's always on CNBC every quarter, at least once. And he was on CNBC after the earnings report, and he was saying how they have the highest interest paid, I think 3.8%. So if you just keep your money in IB and don't do anything, you get 3.8%. It's the highest savings rate without doing anything.
Wow. Mhm.
Yeah. So that's an advantage, right, for people to go into this brokerage. But anyhow, um, I like the size, 8 billion cap right now. I like the price. I like everything. Like this, you know. But I'm like, let me see. It's not, but from a price performance, like I say it's not compared to ALGR. It's not. This is 196 right now. It's not like superb, right? But that's the thing. It reminds me of Zoom. It takes a while to just get out of that, buy zone. And I don't know. We'll see. I'm a little bit starting to feel frustrated about this stock because 3 times now I trade in and I just get knocked back down every time. So we'll see. Like I said, maybe it's better for a medium term position, like hold it longer kind of thing.
Mhm.
Because this might be a volatile stock. You can see like even here. Um, yeah. I don't know. Okay. But yeah, like okay, I'm gonna like there's lots of stock like WNC just reported pretty good number. I'm gonna look at I'm pretty sure Tidewater has come back down. Like all the oil and gas have come back down. The question is, whoa, look at this. This is amazing. Like every oil and gas stock is coming down hard. Look at what this
Mhm.
stock is doing. It's going sideways. If you go look compare, this is the same category, Halliburton.
Mhm.
Look at this. It's come down. What did Tidewater do? Sideways. Look at SLB, Schlumberger. This was the number one industry group um, at the beginning of the year, right? So it has dropped, but again, it's probably just a pullback, I think. Because the fundamental story behind field services are very strong according to many analysts that for this year. It's just there's a big need, especially if China is opening again. There's a big need for lots of drilling and stuff for handling field service, and this is pulling back. But Tidewater is strong. Oh my God, yeah, this is strong. It hasn't reported yet, I don't think. So, but it's on my list, right? I'm watching this. That's the thing. There's so many stocks reporting in the next 4 weeks, especially like growth stocks like this. It's still brand new in the bull market. If this is a true bull market, we will have lots of chances to buy this kind of stocks. Elf, okay. Again, I traded Elf, make my money. I'm out right now, but um, so here's the earnings news came out. Look at this run, really nice. 2 days run is extended now, but this number is impressive. If you look at the numbers, look at this. Earnings,
No.
100%. Look at this sales, growing almost 50% now. It's crazy. It is crazy. Um, for a while, like I missed this whole run. Okay, like a lot of IBD people follow this stock. I missed this
Mhm.
run because the forecast was really, wasn't good. But then, like I said, the numbers did turn around, and now, if you look at next quarter, so like I said, it's okay if you buy late. Don't worry, right? Like there's like if it's a true growth stock, there will be so every quarter it's going to report better earnings, better earnings. That's how a growth stock continue to grow, right? Like Tesla, 10 straight quarters of growing earnings. That's
Mhm.
what you want to see. Don't worry about like sweating missing one quarter. It's no big deal. If you want to catch a true leader, they're going to give you lots of chances. Every quarter they're going to keep beating. Let me look at health. Where's the number? It's strong. I don't know. Like I always wish Marcus Smith put the earnings forecast on the main chart. I don't have to go through this column thing to find it. It's just a pain in the ass. Um, but they won't do it for some reason. I don't know why. Let's see. I know it's pretty high. So I sort this by earnings. You see that? 38%. Yeah. Okay. Yeah, 38% growth. I mean, this is forecast, right? It could be stronger. Just like last quarter, it was negative forecast, but look where it turned out. 100%. Like it probably says it here too. Let me see. See, earnings surprise at the bottom,
Mhm.
108%. That's the surprise difference compared to forecast.
Wow.
So it was forecast negative. That's why I didn't buy into it for a long time. I said, okay, like because I know this, right? Whenever it has a forecast negative, even though, but sometimes the street is right. They'll be like, oh, it's going to turn around, it's going to turn around, and they're right. And this time it was right. But there's cases where um, they were wrong, So that's why I rather wait, but right now it's extended, but don't sweat it. It will come back. It will always
Mhm.
come back to 10 day. It always does. So whenever it comes back to 10 day, um, you know, like the worst thing to do is buy at this level, and then it comes back down to here, right? That's why you don't want to buy extended. But it's on my extended watch list right now. So, um, Tao is another Chinese educator. PDD, like again, these are all Chinese stocks. If you believe in Chinese stock like EDU, like these are the leaders, okay? PDD, like I've been watching this many times now. Like this is the leader, and um, let's take a look at the market here. It's pulling back right now. Again, back to the 10 day, 21 day. At some point, they might even pull back to the 50 day. So that's the risk. When they have a strong run already, see earnings still hasn't come out yet. Um, I don't want to take risks right now. I want my portfolio to be stable every week, growing every week, especially in the bull market. That's what you should get. You don't need to take necessary risks, right? That's what my plan is going forward, right? But
Mhm.
if they prove themselves and then it gives me a good entry point, I will change. And then you can use this 3 day rule tool to figure out where is the, you know, which one is doing a nice bounce. And you can look at this. See, Tidewater shows up here. Now, I wouldn't buy Tidewater right now because, like I said, earnings not out yet. But look at Friday, it bounced. But Friday, yeah, some commodities bounce. Not all of them, but some. So that's a bounce right there. But this is not really, to me, this is not strong enough pullback to buy on this bounce. But Weatherford, another commodity. So lots of commodities bounce. So Weatherford is another one. Yeah, this one, see, this is a strong stock. Holy cow, look at this. Look at this trend. It's just nuts.
Wow.
Um, right? And look at, like I said, oil and gas stocks are correcting big time right now. But look at this Tidewater and Weatherford. They just don't want to correct. Like this is a big shakeout right here for sure. But look at how fast it come back up. Like just one day it already bounced above the 10 day again. These are strong, strong stocks. Again, this is due. Okay, this is due this week. Watch for this guy. Yeah, yeah, amazing. Las Vegas Sands. I like this stock. There's something about casino stocks right now and hotels that are doing really well. Look at this trend, and they're just this is 50-day, 200. See, this is exactly what you want to see. The 200 just started to turn up. It might have a long way to go. And this week was pullback for most of the hotels, but look at
Hmm.
this. It's holding really tight. If you same thing with jets, right? Like if you look at like airlines like AAL, so here pullback. Look at how tight this is. Trading around the 10-day. Look at that.
Hmm.
10 and 21 day. Like it's just it won't even go to 21 day. That's how powerful this stock is. Like if you look at the jets as a whole, the airline group, look at this. Look at how tight this is. That's unbelievable. Of course, Thursday broke out, Friday pulls back, really normal. Okay, that's why I don't
Hmm.
chase. If you miss it, don't chase. It will come close back to the 10-day. I would say this is a good like I remember I told you like whenever a stock breakout, watch the next day. Look at how tight this is trading. Like it's like a dot. The trading range is like a dot.
Hmm.
This is a sign of like institutions unwilling to let go of the stock. This is a true sign. Like I like that. This is jets in general, but like I said, you can buy individual stocks or you can buy this ETF. But I like this chart. Really nice. Wow. Yeah. Look at this volume. No like it's average volume, but it's compared to this, it's not much. So this is sign that um people are unwilling to sell, and the trading range is so tight. Usually, those are signs that no one wants to sell. If someone wants to sell, they're willing to let go at any price. The trading range will be much bigger.
Hmm.
Yeah, I like jets. So airlines, casino, those are doing well. Um, MOD, okay, this one I think it reported um, and wasn't good number. Yeah, here you go. Right, wasn't good number, but look at this bounce back. Oh my God. Lot big shakeout, right? So when I see a shakeout, to me, what I've learned is I find that it's always more positive than negative. Like I would say 70-80% more positive than negative because it shakes out all the weak investors. Plus, it was like especially the next day it went up like this above the 10-day. Like this is like the cream on the pie, kind of like the cherry on top of the pie. This tells me that hey, the weak investors are done. Not only that, the other guys are coming back to buy the stock. This is what it's telling. So like this is the truck group. The truck group is really really strong. I can't remember the ETF for the truck group, but they're really strong. Jim Roppel highlighted this week is the strongest industry group right now, group like in terms of moving up. And so, what does that tell you? Usually, transportation, truck stuff relates to the economy, and if this is doing well, maybe the economy is really picking up. So that's very interesting stuff. So many good stocks, right? Another airline, Ryanair, GV Air, building heavy construction. I haven't looked at this in a while. Ford, again, this hasn't reported, but I believe it's doing well. I think I know IBD was talking about it. Yeah, see, remember this consolidation here? Very hard to
Yeah.
catch it because it keeps shaking people out. It just keeps shaking people out, and then finally, this was the breakout, and look how tight it was trading. This is what I'm talking about. After it breaks out, don't worry about buying on the breakout if you miss it. Watch the next few days, and it's trading so tight. And then even though it doesn't move much, but once it moves, right, this is where the first big move is, and then it trade tight again. Now it moves out again. So now it's taken off. The 200-day hasn't really curved up yet, but that's what you want to see. But yeah, this is end of the month reporting. Okay, Titan is building. Okay, DT. DT was another big. See, lost software enterprise was number one this week. Number one. If I show you on this, let me see if I can show you on this tool here while it loads here. I'm just gonna load this DT here. Now, this one, um, so this one is better than Peloton and other stocks because like this is a beaten down stock too, but the chart is much still better to read. So this is like we'll come back to the numbers in a second. So here's the big long base, um, and broke out right here. I trade in and then um, I'm not sure if I'm completely out yet. Um, anyhow, it's a good gain now, and
Mhm.
Friday it tests the low of the Thursday, and then it bounced all the way back up.
Oh. Mhm.
Right? It's unbelievable. There's so much demand. Like, so we go look at the numbers. Look at this growing. Again, this is one of the few like I said, like the beaten down stuff. There's lots of them, but not many of them have profit. And this is one of the ones that have profit, and not only that, it's growing. And look at the sale numbers, like pretty consistent. It's not growing fast, but it's pretty consistent. So yeah, this week it went up a lot. Um, it's okay. Like I said, don't worry about missing the first part. It will always come back. Here's the 10-day line. At some point, it's gonna come back to the 10-day. But this is a good one. So these are industrials. Most industrial, like I said, is correcting right now. Wing. Okay, so I'm not gonna go down this list anymore because most of them are uh stocks that haven't report yet. I just want to see some of the leadership that is on the old list. Um,
Mhm.
but I'm gonna run the other report for the newer list. But let me see. This one is to check the leadership on the accumulation side. I just want to show you this quickly too.
So what is the date range that you will use?
This one is usually just the 1 day. Oh,
1 day. Okay.
yeah. Stop. I don't know why. Press something and I just have to refresh it. Maybe you just need that. But while I'm running this, I also want to run the other report. So I go back to Q1. So here, let me download this. I want to look at some of those. Some of them we already talked about. So let's try this again. Okay, there we go. Do you have any other questions that we haven't chatted about yet?
Uh, Nothing specific, but the recession fears that we had. So now what's happening to those?
Right. Yeah. Um, I think it's still there. So here's the thing. Here's my take, right? Again, first half of the year, like definitely the first 2 weeks, I lost money because I was pretty bearish, right?
Mhm.
And it's okay to be wrong. You have to cut your loss, follow the market trend, and the last 2 weeks I've been making money, and that's the good thing. Now, in terms of so coming back to like the Eric Johnston, he thinks that the recession will come, it will hit the economy much harder, and the market did not price that in, and it's true, the market hasn't priced that in, and but you know the good thing is, here's the thing, the good thing is, imagine everyone, and this is what happened, right? I was part of the camp. Everyone's like, oh, so bearish, like, oh, earnings gonna be bad, and it is bad. But what did the market do? It did the opposite, right? Stocks like Apple, Microsoft, they're supposed to go down, but they came back up. And what does that tell you? And again, remember, second quarter earnings can be even worse. How does this make any sense? So if there's recession fear, there is. There's no doubt about it. But the question is, did the market already price in the worst? So the economy and the market can be two different things. In fact, the economy is always lagging the market by 3 to 6 months. So I'm not saying the second quarter, like we're still in first quarter, but I'm not saying second quarter is going to be even better. They're probably going to be worse. But maybe the market is saying, hey, the future looks bright. And they already priced that into the stock. And don't forget, all these stocks are still a lot down, right? So, you know, by the time, let's just think ahead, by the time second quarter finishing, and again, there's some fear there, and I'm sure it's going to be volatile. Again, maybe the market will buy in more because as this each quarter goes by, as day by day goes by this year, they're looking towards the future. It's looking towards the second half and even 2024. And they might say, hey, and that's the thing. Market might run up this next few months or even 5, 6 months, and then maybe at the end of the year we might have another correction. Like that's how the market works. By the time you think the worst is coming, yes, but it already ran up so much. You know what I'm saying?
Mhm.
So if Nasdaq gonna keep running, and let's say it runs till May or June, and then it has a correction in the summer because they fear, like you said, there's recession fear coming, and that's why most analysts are saying recession might be happening this quarter and second quarter, which means the real economy won't feel it until like June or July, and
Mhm.
so, but by that time the market already priced all this in, so meaning we could have a run right now, like NASA already run a lot, but let's just say it does run 20% till like May. Well, and then it corrects, 5% or even 10%. So what? That's how the market works, right?
Mhm.
So,
Mhm.
but you will miss this whole run. That's the problem, you know? So don't fight the market trend, follow the market trend. And yes, there will be recession. Yes, it's not going to be good. Yes, the market already priced on it. So that's how I think about it, right? Excuse me. I'm not saying
Mhm.
there's no recession, and I'm not even saying that it won't be bad. It could be bad. But
Mhm.
I think the market might have priced in the worst. The only thing that could happen is something drastic, like CPI will suddenly go back up. Okay, that would be drastic. Um, I don't even know if the job numbers will scare the market anymore, or the Fed decide to raise hikes or something more than 25 point in the next. Like even on Wednesday they were saying some people still even think that Fed might raise 50. Right? I don't think that will happen. I say the Fed since 2022 to now
Mhm.
has never not followed the market. Okay, so they might sound more hawkish, but they always follow the market in terms of the rate hikes. So to me, that's the turn. I'm gonna come back to S&P for a second because let's jump to S&P, right? Because I feel like this is where a lot of people got caught up, and you know, okay, there's this downtrend line, right here.
Yeah.
This is the day it went above it clearly, but this is the non-equal weight, right? So if we go to RSP, this is equal weight.
Mhm.
So meaning if you count like the whole, like forget about the weighting, and not just look at the big stock, but look at like you know every stock is equal. It, look at this pattern. Holy cow! Look at this pattern. Look at this cup and handle pattern. It's nice, but also if you look at sorry, what is the weekly chart? Here you go. Yeah, it's exactly 2 weeks ago, right?
Mhm.
That it turned, and look at how close this is to the high. Like this is much closer than the S&P. Like this
Right.
equal weight is much closer to the high than so this is like again we have this run, we have this digestion, now we have this run. It probably will go up to this line right here, and then digest again, and then break out. That's most likely what will happen. And then once it break out, at some point it's gonna. This is what I'm saying. May or June, they'll probably have another consolidation here, a bigger consolidation. Who knows? It might even come back down all the way down here, right? And that's the recession fear that everyone's worried about. But that might happen much later, and you will have missed this whole big one. Does that make sense?
Yeah.
Yeah. I don't know. I'm just saying, like this could be what happens, right? So, but like I said, what I'm seeing is I see a lot of stock potential that could be the leaders. That's IBD. That's how they follow the market, right? They don't care too much about the macro, in terms of when they call a bull. So they call like. So I'm gonna come back to let me show you my I track this, right? So this is at the beginning of the year, market in correction. This is IBD call. June 6th. That's the same day that David Ryan came out on IBD and said, hey, something has changed. In the morning, even before the end of the day, he noticed a lot of stocks breaking out. And so IBD followed two things, the indexes and leading stocks. Everything else is secondary. They don't care too much. But those two things are the primary indicators for them. They saw that the indexes, like I said, Nasdaq hasn't even gone up the 50-day yet on that day, right? But S&P and Dow has. S&P was the big one. That was the reason. Oh no, not S&P. Sorry. Yeah, S&P. Sorry, it did go up above the 50-day that day. But more importantly, was stocks breaking out, and they make a call. I was like, I didn't even believe it. I was like, wow, I've never seen IBD make a call so early, right? And if we look at that day, the funny thing is, here's the funny thing. Using my tool, we ran the analysis on how many stocks are up versus down on accumulation, and how many sectors. So it's funny here. I don't know if this is a mistake here. It might be a mistake. I don't know. No, maybe not. It was pretty close, but so this is number of industry groups leading, and this is a number of number of stocks leading in accumulation. And you can see there's some accumulation happening, not much. Then the following week, you see this number rising and the industry group rising. And then we're starting to see clear leadership. So see, industrial was still leading. So this third column, sorry, it's hard to see, but so this is tech, retail, industrials, health, energy or commodities, and finally financial. So you can see here, retail, industrial took the leadership early on, financial took the leadership. The week after, we saw some distribution here, 2 days in a row. And that was a little bit scary. So that was the first distribution day, second distribution day. But this is good because so normally after a confirmed uptrend, IBD will look at the next few days. The week after, there wasn't distribution day. So that's a good sign because most confirmed uptrend when they call, if it has distribution day within the first week, like especially the first 3 days, are really bad sign. Like 80% of the time will fail. And so it didn't happen the following week, but it happened the week after. So this is like the sixth session now, sixth session after the following day, and we got some selling here. And then it started to pick up again. So now you see more stocks. Look at this. This was the highest here right here, 800. Monday we had a sell off, but even Friday we closed off with 800 stocks accumulated. And then leadership, you see the tech wasn't leading for a while at the beginning. And then after this distribution, and that's probably when it crosses the 50-day line, is around here. The Nasdaq crosses the 50-day, and people start believing in this rally now. And look at this. It started off, still not that strong, but it was taking the leadership. Look at the number of stocks, right? And then by this, look at this. This week it started to take over. But financials, tech, retail, industrial, those are the four leading this rally right now. And health and commodities are not. That's what's happening right now. So tech will most likely. I like financial. Out of these four groups, I like financials the most right now. Um, and so let's go to like. Does that make sense so far? I mean, we're gonna look at
Yeah.
my new list because that's where I'm not saying tech won't be the leader. Okay, don't get me wrong. I'm just saying most of them hasn't reported yet.
Mhm.
Um, there's a few that has reported, but not a lot. A lot that hasn't. And the ones that have reported so far, Allegram was the only one that really stand out on my list. But yeah, let's go look at that list because we'll see it clearly. So let me see. Did I open it yet? Yeah, it's this one. Okay. So see, Allegram is number one. Right.
Mhm.
Number eight was the one we also saw earlier. We saw Peloton. We saw EDU from China, education. WNC industrial. ELF retail. ASML. Okay, there is more technology than I thought. ASML here. Um, these are all the ones that have reported. Las Vegas Sands, UI, industrial, really strong. BA, yeah, BA is also like Boeing, right? Also, how do you say, has kind of pulled back a little bit. Like I said, the industrial is like not very strong right now, but they're
Mhm.
not doing bad, right? They're just building a nice sideway. Look at this, 4 weeks of tightness. Look at that. This is after a big game, right? This is what you want to see after a big game. Sideway instead of pulling back like really strong, instead of going like this, they're going sideways. This is like clear indication of institution buying or not
Right.
willing to sell. Let's put it that way, right? At least not willing to sell. Okay, so that's really strong. STM, another chip guy, that one's also really strong. Um, sorry, just I don't know why my browser thing went all the way here. Anyhow, I'll fix it later. Yeah, look at this, crazy run.
Wow.
It's still in the base, right? Um, that's the thing. It's still in the big base. It's trying to break out now, and this is what I'm talking about. Like, it's okay to buy gap up on the earnings in the base because they usually want to run up. So this is where the gap up happened right here. This is the gap up. See, I bought here. I trade it out of it very quickly, took my gain, but then I didn't buy back in. For some reason, the earnings was forecast down, but then it changed it back to positive again. So that's why. So now it's positive again. It was down um, for a second there, a day, and then they changed it back to 19. So then now it's still on my list. So I didn't get it back in after that, unfortunately. And I sold this quick because of that revised forecast now. But then it actually was wrong. So sometimes that happens. Restaurant eat um, SMCI. We talked about this many times
Yeah.
before.
Awesome. Mhm.
Um, it was correcting before, but I think this correction is really nice. Um, Now it's coming back above the 50-day. I feel like most of the correction are done. Now you have 3 days of bounce. It's above 50-day. Very nice pattern. I like it. This is a really strong stock. This was the leader before, and I still think this is the leader. This is one of the. It's not a smooth thing because it just keep pulling back. Correct. Went up a lot. Correct. Went up a lot. Correct. Right. But to me, those were during the bear market, right? This is the bear market time, and it was able to do this. You won't find any chart that does this. At least not. I haven't found many. So it did correct here, but I feel like if it start run, it's gonna be strong, because all the people who sold here, 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 all the weak investors are done, and this
Mhm.
the numbers like really really strong, and it
Oh.
already reported, right? So where did it report it? Yeah, right, um, right here. Yeah, so this was the day after the report it jumped. But I don't buy below 50-day. So I'm pretty sure I own it now. So I buy it higher. Again, it's okay. On the right side of the base,
Mm-hmm.
don't worry about too much like um short-term trading because that's where the run goes fast usually. So even if it's off 10 day a lot, I still buy it because but once it start moving and is above the buy point, the 10 day becomes more important where your entry point is. So, but I'm not saying this is out of the wood yet. Like it could still fall back, but you can see the upper trend lines right here. So there's still one more big test right here. Um, but anyhow, but I like this stock. It has good numbers, so good forecast. It's one of the leadership for sure, triple digit growth. How big is this stock? Let me see how big of the cap. 4 billion, almost
That's
five.
perfect.
Yeah. So these are the kind of stocks. If they are true leaders, they can 5 times your money in a year, 5 to 10 times. If they're true leaders, they really can grow at this rate, triple digit. Like, this is 4 quarters of triple digit, man. That's crazy. And sales are growing at 50 to 70%. I mean, I don't think you will find like even like yeah compared to Allegro like this is not even like it's starting to near triple digit.
Mm-hmm.
But it's nowhere compared to that. Like so but they're both good. Right? I don't want to say one's better than the other, but I from the fundamental side, yeah. But both fundamental, technical, SMCI is definitely yeah. See, this is the kind of leadership I like to see. LPG, this one is on my radar right now. Um, it's a commodity stock. It's a newer name to me. A smaller name, Dorian, less than 1 million. Yeah, I make a big move right here. So I got in. Look at these numbers. It's like super strong, you know. Broke out the base right here. So so the other thing is like, okay, so one of the things that you find in the bull market that I'm finding is I always run out of money to buy. um, and so I keep rotating, right? Like I take profit, have some cash, I see more stocks, I buy in, I'm full again, rotate. Like
Mm-hmm.
that's constantly what you do. You're constantly rotating so that you have cash to buy into stocks that just broke out, and you take some gains from the other ones. And yes, it's not like a long term thing. It's a short term thing. But the thing is, as time progress, you will because this is still early in the bull market, like the cycle. So as these stocks are breaking out, you want to see like this is what I start drawing. This is the first time, like January 6th, right? That's when I start drawing this line. Do I see accumulation? And I'm going to start drawing this now, right? So then you can decide which one you want to play because there's only so many stocks you can trade, even for me. And so I need to start to decide which one I want to trade. And so you look at those volume bars, right? Look at 3 volume bars now on high.
Mm-hmm.
Every time I make a new high on high volume, that's when I draw it. It's that simple. I draw those days. Oops. That's when I draw it. Because you see, look, this 3 out of 5 days is high volume. That's crazy. That's how you want. This is how you know people are coming in. I don't, probably even institutions are coming in. Like three out
Mm-hmm.
of five days in high volume. That's how you know. Okay, and these are the kind. So, like LPG, it's pretty high on this list right now. So I'll be trading it for sure. But like I said, as you have more and more stocks come into this list, you have to choose and figure out which one you want to trade. And the one thing I'll be looking at is going to be starting looking at this volume thing. At the beginning, you can't tell who's going to have more volume, but now as days progress, in the next month, 2 months, 3 months, the ones that have the most volume days up, those are the ones you want to trade because it's just those are going to be the one that's more institutional quality, right? And even
Mm-hmm.
like I said, even though this one is still a small cap, but it just show institution like maybe they're starting to get into this. I don't know. Um, yeah. See, right now there's 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 no. So this box right here is IBD mutual fund index only. So IBD
Hmm.
track the top mutual funds in the industry. I don't know how many, like 30, 40, 50 of them, and none of them own this stock right now. So, um, so it's unfortunate, but that's the thing. If this is high, like look at this run. Like this is so nice. Like this is a long base right here. This is obviously before this didn't do anything. I don't know why it didn't do anything in 2021, but 2022 it start running, which is weird. Then it built this nice base, and then it run again, and then now it built this base again. Now it runs again. So I don't know the story behind this stuff, but oil and gas transport pipeline. So this is the same as Tidewater. Um, no, that was fuel service. Sorry, this is transport pipeline. So anyhow, yeah, it's pretty strong. Again, okay. So the one area, like before we close off today's meeting, the one area I really like to talk about is banks. They're not like performance wise, they're not the strongest, but
Hmm.
from a group perspective, is surprisingly the biggest. So if I look at financial, see, there's like how many? Like I don't have a big list. 24 out of 82. That's like a quarter of them is financial. And so T- TPK new highs, right? Look at the volume, right? Now this sales was down. I don't know why. It's weird. Oh, not available. I don't know why they don't have the sales number yet. But the earnings are. Look at this. First time it grew 54% compared to here. Okay, so and then this is 2 billion market cap. Look at the chart. Earnings bounce right here. What do you do? Like trade really tight. Like trade starting to trade tighter. Boom, new high. Like I like this trend right now. Right,
Hmm.
200 day starting to curve up. 50-day starting to curve up. I like this one. SoFi was the next one on the list. They just reported this week, and look at this. First day gap up, and then second day digest.
Hmm.
Third day, fourth day new high. Fifth day come back down. Now, so a lot of growth stocks drop on Friday. So we follow that pattern. But again, SoFi is at least the CEO said they might be turning a profit this quarter, which is very surprising. The second thing is also the sales are growing really fast, 83%. Um, so those two things combined makes me want to invest in this stock, even though this is a billion dollar stock, right? But
Hmm.
it's on the list.
So far, yeah.
Yeah, cash, amp, bank, bank of can't remember. OCS. All this, a lot of these are small. We already look at IBKR, EFSC, Region Financial. All these are really small, like you can see, regional banks,
Hmm.
right? And they're all doing well. Like, I think LPLA, like even the ones at the bottom, um, they were newer to the list that broke out. Um, so LPLA, yeah. So these are the ones that are starting to break out. Like, look at this number, triple digit growth, right? Now this one, so the way I treat reverse down day, but it's still up, right? So this was so earnings came out, it was bad. Like at first the market didn't like it. Second day they like it, and then they jump, and then it reversed. It's not the best chart, you know, but it still show accumulation because
Hmm.
it is still close above. So so I still like it. SSB, right? Not very nice chart. That's why they're at the bottom of the list. But these are stocks that just breaking out. Look at this, right? go above 50, 200 day. Again, let's see the numbers turning around, sales consistent, right? It's not the strongest, but like I said, these are the ones that are turning around. Um, yeah. So a lot of these are smaller cap stuff. Charles Schwab is in here. Um, I haven't traded Charles Schwab yet. I think it's building a pace. I think. Yeah. See, it's below the 50-day. Um, I think the market didn't like the numbers at first. So right here, this was the big down day, and then now it's climbing back up. But I prefer interactive brokers more than this one.
Mhm.
But yeah, there's all these ones that I like I say I like let's look at the ones at the top. The chart's probably better. Cash. Yeah, this one look at how nice this time is. Um yeah, so it's not a strong earnings, but they're positive. Uh and the small like I said, there's something happening with the small banks. They're doing
Mhm.
really well, which is also a sign of the economy growing. Because usually small regional banks don't do well unless people are going in and taking more loans. Um, so that's very interesting. And they're all forecasting like, they're on my list because they're forecasting good earnings. Let's take a look at this one. 23%. Like not a huge number, but they're growing. Um, so 22%. Yeah. So new high. So all these small guys, like I feel like they can take the leadership. And a lot of them are just like this one already broke out, but a lot of the ones probably half of them hasn't break
Mhm.
out yet, but they're just moving the right side of the base. So they're not the strongest leadership. I think tech in general is still the strongest leadership, but for some reason they dominate my list, which is very interesting. Like if I go look at tech, look, I only have a few, but again, this you know obviously this is all based on only up to today's reporting, but
Mhm.
still it just shows that for some reason financials are doing a lot better on the earnings side, which is interesting. Like if you go to XLF, oh, that's something we didn't do today. If we go look at um, compare the all the sectors. Sorry, let me try SLK for a second here, and then run this report here at my sector list. Okay, and we're gonna go from the beginning of the year just because it's more shorter time frames to see clearly. Here you go.
Mhm.
So we can see the leadership here. So surprisingly, retail 21% at the top here.
Exactly.
Retail. The second one, I can't really see it. Select communication service. So that's like Meta and some of the
Mhm.
yeah, 21%. Those are the two top. Third in place, XLY, consumer discretionary. So this is interesting, right? You know, because these are exactly like what means in a bull market because those are the sectors that do well in the bull market. XLK, so that's technology. That's number four. So notice how 21%. I just want to make sure I'm reading this right. This is right. This is since beginning of the year. XRT. So retail 21%, communication 21%. Is a wide gap. Is what I'm trying to say. Consumer 17%, technology 13%. So the gap is going down much faster now. So like those are the
Mhm.
top four, right? And then we have re- real estate. That's also very interesting. That's like the middle ground, 10% right here, right here. So that's the middle, and then everything else is kind of lagging. That's very interesting, right? So
Mhm.
like so financial. I was talking about financial, 7%. So that's lagging too. Yeah, yeah. And then industrials, even industrials. Where's industrial? Right here, 4%. Materials, 7%. Huh. So yeah, so that's interesting to follow. I don't know like if this trend will change or not, but you can see like this is like the middle of the year right here, and those are the ones that took off. Retail, this consumer discretionary, yeah. So that's why you know, if I go back to my list, I don't know, like I don't know who's gonna take the leadership. I feel like it's gonna rotate. That's usually what happens. If I go back to retail here, yeah, it's quite a bit. You see a lot there are airlines, trucking, and these are the only ones that I have reported so far, right? So I don't know, it could be bigger list. It's hard to tell. Um, Financial is big. Commodity is probably the smallest group here. Yeah, we already help. Oh no, help is probably the smallest. Yeah, hasn't really done too well this year so far. Um, yeah, so just want to see where the leadership are, but uh, but I don't know. Depends how you trade. You really don't have to look too far. Just look at the list here, and let's look at the more things that is more actionable right now. So LVS, um,
What was the criteria to short this list?
the sorry,
The
what was
triangles.
oh
What was that?
the 3 day
Yeah.
rule? It's
Mhm.
just a 3 day like if it bounced off a 3 day drop.
Yeah.
So
But what all triangles did you use? Solid only. Or
okay, so you can use like I use both, right?
Mhm,
So for example, when it didn't make a new high like this one,
mhm,
so
mhm,
it's going down, it hasn't made
mhm.
a new high yet.
Yeah.
So the moment I'll say alert. So here I'll change my alert. 58.47 is the high. I'll
Mhm,
change this to 58.47. So when it hit that high, I'm not saying this is just a probability, right? And
mhm,
when it hit that high, it's possible that this pullback is done,
mhm.
right? So then I could make an entry point here on Monday, right? If it hit that
Okay.
high. So
Mhm.
that would be a non-solid triangle. A solid triangle means it already hit that high.
Okay.
So this is non-solid triangle. Okay.
Mhm,
So if we look at each, it's a solid triangle. So this is probably a bounce off the pullback. So here's the pullback right here. It's a
mhm.
very short pullback. It's like a 4 day pullback here. It's a very ugly pullback. Let's put it that way.
Yeah.
A shakeout, and now it has already made a new high since um, I can't remember which day it used. Usually from the top right here, from the top here,
Wednesday.
right? And so yeah, okay. Now this is not like I said. This is not you know the nicest pattern. This stock is very choppy though, so you have to be careful. Like it might chop again. You know,
Mhm.
if you're trading short term and your stop is very close, you're gonna get shaken out. Um, DT we saw earlier. Um, so DT, let's go to it. So this is an exception rule. That's why it has an arrow and an E. It's
Mhm.
not quite a pullback. It's what we call outside day reversal, right? So it make a new low, but then it closed at a high, and not only that, it broke above the previous day's high. So this is a exception to that rule that I will consider potentially a buy, right?
Mhm.
Because it already basically what it's saying is that now it doesn't always work, but it's just about probabilities. It has a higher chance of working, and it means that it already tests the sellers on the previous day, right? At the low here, and now it make a new high, which means there's buyers coming in. to buy that high. So that's why it's a potential entry point, right?
Hmm.
So I like that actually. NVO, this one also reported this week, and surprisingly, I think it bounced really strong after the report. Yeah. So this one, let me think about this for a second. This one, so this is the week report. Bounce back here. Um, it shouldn't be like according to this chart, it shouldn't be really. Yeah. So here's the thing. I don't usually buy below. Okay, so it bounced back, but like for me, I won't buy because it's below the 10-day, right? So it did bounce back, but I don't want to buy this. You know what I mean? Does that make sense?
Hmm.
Yeah.
Yeah. Hmm.
Like, see, that's why I set my arrow here. Like, it has to be above 10-day. Now, it could happen on Monday. Like, it could go up like this, and then I'll buy. So if it go up like this on Monday, usually I give it at least 1%. Like, especially on a downtrend, because sometimes it'll go up a little bit, like just like here, go up a little bit, come back down, go up a little bit, come back down. You see?
Hmm.
So you want to be careful on that, right? So this is a downtrend. If it does break this downtrend and move out like this, I don't mind buying it higher. You know what I mean? Like especially like even around 140. You know what I mean?
Hmm.
You just want to give it enough room to make sure. And it also depends on the time of day. And let's say in the morning it drops and then it bounced back like by 10 o'clock in the morning. Like let's say it goes like this drop, but then it goes back like by 10 o'clock it was up here. So it already tested this low, right? Then that's another thing why I don't like to buy in the first hour, is I want to give it time to test the low, right? Um, and if it doesn't, especially if it hit a new low, that's even better if it bounce back up after that. Like that's exactly what I want to see because it tested the low. People who want to sell already got out because it hit their lows from previous day, and then now it's bouncing back up. Hey, that means those guys are gone. Like they're not going to sell anymore because they're already gone.
Hmm.
That's what I like to see. That's how I like to set my stops. Right? Is I want to see that low of the day being tested. So um, yeah. AMP, we talk about this. There's a potential buy here. Again, non-solid triangle means it's bouncing, but it still hasn't made a new high. So right
Hmm.
here, it hasn't made a new high. And like I said, I used to buy on this criteria, but I feel like, and so I used to only have one triangle, but now I have solid and non-solid triangle, just to tell me that non-solid means it hasn't made a new high, and I found that 50% of the time, I don't know exactly the number, but half the time it works, half the time it doesn't. You know, and it works more when it's on a general uptrend. So this is a general uptrend, and if it's also on the downtrend like this, and if it bounce back, like you have less chance, right? Let's say this is 33% chance, this is 50% chance. Still low. That's why I don't want to buy it. Right? I'd rather buy on a newer high. And if it does bounce, usually it bounce um, more, right? Like it wouldn't just stop there. Usually it will bounce more. Um, so JCI, this is Johnson Control. Um, yeah, see this even though this bounced, but I wouldn't buy. I have to wait for this 10-day. I never buy under 10-day. That's my rule. Uh, ALV. So this is come back down to the 10-day. It's bouncing. It closed at the top. So again, I would set this at the top here, 91.12, and I want to see it hit above this. Yeah. So yeah. Um, let's see what else there is. I think you know Oh, Pulse came up on Friday. I didn't buy into it, but I think I like it. I was looking at it yesterday. So Pulse is where let me see. Good package. Okay, so it bounced right here, make a new high compared to previous day. on really high volume. This is the earnings result. If we look at the earnings here, it's growing really fast. Look at that. 24 cents, 69 cents, 85 cents, 108. And the sales are pretty good too.
Mhm.
And this stock, I know it's like, food package. You're like, oh, that's a boring stock. But look at this stock. It's like a really good, like, long-term stock. It's doing well even in 22, right? So, go figure. And this is like mid cap, 5 billion. Yeah. So again, so there's just so many ideas. It's unbelievable. And we're not even like, and these are the only ones I have reported so far. If I look at this list, I think maybe like 30% have reported on my list, which is very little.
Mhm.
Because the way I track them is using this flag. Look at most of this hasn't report. The ones that have report has a flag. Um, it's just so many stocks, and this rally could really go on. Is what I'm trying to say. If this continues and this stocks continues to do well in terms of their earnings, um, man, we're gonna have a good next few months. Is what I'm saying.
Mhm.
And the way you monitor, that's like I said, IBD teaches two ways to monitor your portfolio. One, when you buy into a breakout or something like that, a stock, a growth stock that breaks out, is it making gains for you? Is it cutting you like crazy? Like meaning it's shaking you out and hit your stop point. That's the first criteria. Second criteria is look at your portfolio overall. Is it doing good, right? It doesn't make sense if the market is going up and your portfolio not going up. That's another thing to look at, right? So those two combined should give you a good sense of whether what you're doing is working or not. And then, like I said, I like to be even more granular. I like to look at the mark minervini way. What's your average gain? What's your average loss? How many trades you win and lost? Does that make sense?
Mhm. Yeah.
So there's so many ways to look at your own trades and determine whether this market. So like I tell you, even though I've been buying for like a couple of weeks now, I
Mhm.
still feel the market. That's how bad this market is. And that's a good thing.
Mhm.
Psychologically, the more people feel this market and won't get in, and they just keep waiting and waiting for the shoe to drop, it never drops. And that's the
Mhm.
good thing, right? And so don't fear this market. Learn to measure your result. Um, like Monday, I feel the market may drop big. But don't fear it because the actual thing that's happening in the market is very different. I hope that is a good finishing closing statement.
Mhm. Yeah. Yeah.
Yeah, yeah. So, yeah. Um, uh, so that's the way to go. I know there's gonna be pullback at some point. Just don't FOMO. That's probably the worst thing you can do right now is buy into extended stock and then get ripped like 10-15% in a day or two, like on those
Mhm.
growth stocks, right? You don't want to do that. Um, that's the worst thing you can do. Um, yeah.
Mhm.
So,
Perfect. Makes sense.
um, so